hello. How's everybody doing? And let me know if you can hear me once you can. Type it in the little box. Awesome. I'm going to put in some headphones. And I'm going to give like 2 minutes or so for people to get on. Not too long. I'm really excited though. And if you want to, I believe all of you guys, I always let people say where they're from and their name. Hold on one sec. By the end of the webinar, everybody will know everybody. All right, never mind. I'll just shout everybody out. Josh is from Hawaii, making all of our places look horrible. We see where you're from, Rashad. Garden City. Peter's making everybody look horrible too. New Zealand. Okay. Oh, you from Fayetteville? See, Philip from North Carolina. Oh, we got Vegas. We got Memphis, Boston, Orlando. It's a nice little mix up here. Pennsylvania. Ooh, Charlotte, Houston, San Diego. Dang, this is crazy. West Indies. French West Indies. Now that one might have beat like all of them. This is awesome. So really, really nice mixed crowd. I love it. And we'll give it about 2 more minutes or so, actually. I just want to make sure. I know a good 50 people should be hopping. So if they don't, then we'll be ready and set and we'll just go. But what you guys can expect tonight, pretty simple. We're going to be covering Forex A through Z, all the technicals, all the basic technical analysis. We'll be focusing on entries by the end. My goal is to get you, get you entering your trades correctly, no matter what type of trader you are already, even if you trade with indicators, etc. Doesn't matter. Even if you have a strategy, it doesn't really matter. I'm just going to make sure that you understand everything about structure. I'm actually going to read you guys the blueprint, my blueprint real quick. Y'all can tell me what y'all think. So basically what we're going to do is we're going to do it like modules. So what I usually do, and we'll have breaks in between the modules because 3 hours is not only a long time for me to talk, but it's also a long time to listen. So I want to be able to break it up, just no different than when I hosted the 14-hour. I hosted a 14-hour webinar back in March. It was a 2-day webinar though. But it was still about 4 hours, it was about 5 hours of content on each days, and it was just long. So I broke it up into breaks and sessions, and basically what we'll do is after each module, we're going to just take a Q&A, and then we're going to break for about 5 minutes, 5 to 10 minutes, go get some water, use the bathroom, do what you do, and then come back to the computer, and we'll get going again for our second module. So really tonight, depending on the time frame, what I try to do is use about 30 to 45 minutes in between each module. So what I did was kind of mapped out 2.5 modules, and then we'll have a ton of time to talk, for Q&A, because that's really the big piece, honestly. What I really noticed, even from private coaching, a lot of people have way more questions after we get going than even the aspect of just me sitting there teaching a ton. So basically what you guys can expect, though, is in module 1, we'll be just covering candlestick basics. We're going to be covering bodies on the candles, wicks on the candles, the opening price, closing price, highest price, lowest price. Then we're going to be getting into decision versus indecision. We're going to cover basically the whole aspect of bulls and bears, so understanding just like what the market is, how it works, etc. So that'll be module 1. We're going to do a Q&A on that, and then we'll move on to module 2. Module 2 will be, then we'll get into trends, which will be basically, yes, Philip, I will be recording it. Everything's recorded. If you look in the group, I actually, sorry to cut myself off, but in the group message and just in the registration email, I always said it'll be recorded. So yes, it is recorded. And you guys will get it, and it'll send an email to you with it, and I'll also post it in the group chat. But back to the second module, which will be covering trends. So that's kind of like the market structure. We'll also be covering continuations, reversals. Then we're going to get into support and resistance. You guys are going to get to understand that, which is a structural thing as well. Trend lines, another structural thing. And then we're going to do Q&A. And then after that, we're going to be covering there'll be a couple different things. And then after that, we're going to get into entries, which will be kind of our last thing that really, we kind of take our time on. And that is really the recipe for, on a basic level of technical analysis, being able to perfect your your trading has a lot to do with all of what I just named above. So then we'll just be doing Q&A, and I'll leave it open for you guys kind of to close this out with questions. How does that sound to everybody? And then the lines. All right, awesome. All right, so what I'm gonna do too is the chat box will be open. The one thing that I will say is that if a question does not pertain to the webinar, the current module, so I'm gonna have on the screen, it will say what the module is about. In a second, you guys will get to see it. So one thing, so that we can keep the webinar just smooth and that nobody gets confused, what I always ask is that you ask questions pertaining to that specific module. So if you have a question about, let's say, entries, but we're on module 1, then save your question for the actual module with entries. Does that make sense? So basically, we're just not going to get anybody confused, and then your girl won't be stuttering and trying to answer everybody's question. We'll basically keep it really, 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 clear for everyone. So that is just the one thing that I ask so that it runs really smooth for everybody. But I'm about to get my screen share set up, and then everybody let me know when you can see it, and we're about to get popping. All right, can everybody see my screen share? Hold on, let me go back to my chat. You should just see GBP USD. Perfection. All right. Let me move this out the way. Perfect. Okay, so the first things first is going to be, basically what we're going to be doing really quickly is just covering the market itself. So understanding, most of you guys should have a pretty adequate understanding of just what Forex is. If you don't, I can run it by you really quickly. So if you're a total beginner, then Forex is the foreign exchange market. So you're trading currencies. Basically what you're doing is you're looking at one currency's value in reference to another currency. So what that means is basically you're really saying how much more valuable is one currency than the other currency. So have any of you guys traveled internationally? And some of you should understand this because you are my international clients. So you should know how money converts from one country to another. Have you guys ever seen that? Have you been out of the country? You have, say yes. And if you've exchanged your money, then that's foreign exchange. So for instance, right now we are looking at the British pound versus the US dollar. So what that means is basically that we're seeing how much US dollar it takes to equal 1 pound. So if you kind of look at it or think about that, that means that if I was going to Britain right now, then I would have to understand how much of my US dollar I would need to go, give to get 1 of their pounds. So basically it's all looked at from a 1 standpoint, and that's what you actually get, what they call base and quote currency. So really what that is that whenever you see you're on a chart and you see GBP USD or you see Euro USD, the one that's second is always the measuring amount. So basically the quote, it's what you're looking at to see how much of that one does it take to equal the first one. So basically if we looked at it in a really quick formula type way, let's do that. What I'll do is I always type out, let's do base and quote. So the first one said is always your base. And always think of it as like base equals 1. So the base of something. So base equals 1. So 1 pound. If it's Euro USD, 1 euro. If it's USD CAD or USD CAD, 1 US dollar. So the quote, if you think about a car quote, they change, right? A house quote changes. A quote of something is always changing. So it never stays the same. So that's actually the price over here. Whenever you're paying attention to price and you're looking at pips, that's what people talk about all the time, that's your price to the right. So we're not going to spend tons of time on this, because what I'm actually going to do for you guys to really, really learn this on a solid way, I'm going to send you guys all the video on it because I don't want to spend a ton of time teaching about, this is what they call basically the fundamentals of just understanding Forex. And you guys didn't pay for that. You paid to understand the technical aspect of the charts. But I still want you to understand what base currency is and what quote currency is, because your quote is what's actually it's what you're looking at on the chart. So you're looking at the quoted price for how much dollar it takes to equal base. So quote always changes. And this is kind of how we can kind of see, it's almost like basically what we're getting to see, it's really cool in real-time action. It takes $1.30, basically $1.31 almost in US dollar to equal 1 pound. So can you guys see how our currency is actually less valuable than the pound? Does that make sense to you guys? And if it makes sense, type yes. All right, cool. So basically, now that we kind of understand that, like I said, I'm not going to spend tons of time, but the basics of why I wanted you to understand price just on a very, very basic level is that price is how you make your money in trading. So really what we're betting when we trade is we're betting if price is going to rise or if it's going to fall. So if you sell, what do you guys think happens? You're expecting price to go down, right? And if you buy, you're expecting price to rise. So basically, if you buy on a Forex chart, that means that you're saying, okay, hey, or if I bought this right now and I actually did buy it earlier, I bought it somewhere in here-ish, but if you're expecting it to rise, then you're expecting the price, which is over here to the right, to go up. So the count on it goes up from the furthest number to the right. And those are what are called your pips. Now, people read pips differently, and I'm not going to get into that. Like I said, if you're making money in trading, have any of you guys ever placed a trade on demo? If you have, say yes. You'll see how if you bet a certain amount of money, like let's say I said, okay, hey, for every pip it moves, I want to make $1. Well, if I put that on a trade and I placed a trade and I bought, and it went up 76 pips, which you can see over here, it did rise 76, well, I would have made $76. So basically that is how you make your money, from the digits on the right. So simple, simple, simple. Like I said, I'm going to send you guys actually a full-fledged video where I break that down on a really, really, really meticulous level. I wanted to save time, so I'm not going on some meticulous rant tonight on all of the different things like margin, leverage, all that different stuff. I actually have a very, very, very in-depth video series on that. That's why I'm giving you guys that in what would you say? In a group with this as well. So basically you can go back and study that, but it really has nothing to do with the chart work. And that's what we're about to get into. So everybody should understand what the goal of Forex is though. It's to buy and sell. So like I said, you make your money off of the pips and you make your money from buying and selling. So the coolest thing about trading is that you actually can be a buyer or a seller at any given point. So literally, I could be buying right now, but if I thought that price was going to drop, I could literally close my trade out and sell. And so the neat thing about that is that you actually have options. But the coolest thing with trading is that really you're actually, when you learn technicals, you're learning how to follow what they call the trend. So this is something that kind of gets built off of, if you guys can see, and what I'm going to do is zoom in. I'm going to start to type in a second. You guys see what these things are? Most of you guys should know what they are because you've been in a group or you've seen something, and they're called candlesticks. So these make up the big patterns in the market. The market kind of has a pattern, and the patterns are called trends. So the candles make up trends. But basically, what I'm going to do is start to break down now candlesticks. So basically, the first things first, we're just kind of going to go through everything. And I'll actually pull up my notes so everybody can kind of see that too. And don't mind my other notes because I have a lot of notes. I'll delete this. All right, so first things first is candlestick basics. So basically what that means is that we're going to look at the first thing, what are the candlesticks and why are they green, why are they red? So just no different than how I just talked about how we have buying and selling. What I want you guys to know is that when you're a buyer, candlestick, or when it's a buying market or a buying, let's say, even a buying minute, a candlestick will be green. And when it's a selling minute, a candlestick will be red. So what I mean by that is that you actually get to look at the market from every given standpoint. If you're on a minute chart, every candlestick on that chart, and I just switched over, represents 1 minute. So see how this is green and price starts to rise? You have 1 minute here, 2 minutes here. Then we see a red one, so that means price dropped down. Then we see what? 1 more minute of green, 2 minutes of green, 3 minutes of green, 4 minutes, 5 minutes, 6 minutes. So literally you can look at the market from a 1 minute basis to see exactly what's going on. And what do I say the candlesticks represent? Price. So price is dropping down right now because the candlesticks, and they're just showing you in picture format what price is doing. So basically, if we go to a 3 minute chart, every candlestick represents 3 minutes. So we have 3, 6, 9. So for 9 minutes, I could actually hold my mouse there. Let's see if I can turn it crosshair. Price dropped down from up here all the way to down here, which really was only about 40 pips or so. So not a lot, or 40 micro pips, not tons, but then you could bump up to the higher time frames. 5 minute chart. Every candlestick represents 5 minutes. So can you guys see how when the candlesticks are green, price is going up, and then when the candlesticks are red, price is coming down? So basically, green and red show us two different things. They actually have names. And what I was going to tell you really quickly as a side note is that I'm teaching you from what they call more of like an intraday trading type of a mindset. You want to stay on your higher time frames because the higher time frames show you a lot more of what the market is really doing. So what that means is that, we get to see kind of the bigger picture and the longer term picture from being on the higher time frame. So basically, what you're going to see is that if you're on a higher time frame, you kind of get to, how would you say it? You're going to make more money. You're going to stay from getting faked out. You're gonna basically not get fooled by what's going on the baby time frames, because the baby time frames can trick you a lot. So the longer the time frame, the more accurate it is usually. So every candlestick on the 1 hour chart represents 1 hour of data. So 1 hour of what's happening. So basically, what I'm gonna do is type out red candles, or let's start with green. Green candles, and I just spelled green fun. Green candles equal buying, aka what they call the bulls in the market. So bulls are what they call buyers, okay? And then you have what they call red candles. They're seller candles, selling, aka the bears in the market. So have you guys ever seen like anything with stocks or anything where they talk about bulls and bears, or bullish and bearish? If you haven't, that's okay. But if you have, basically, if you have, that's cool. But if you haven't, that's okay. It's really simple. Really, it's just a nickname, honestly, and it's not something that's so like dramatic. It's just that if you watch like different, let's say, webinars online, if you go look up other people's teachings, etc., you want to know like what they're talking about. Because when I first started trading, I would get online and I'd start watching stuff, and I'm like, what is a bull? And, I'm listening to the instructor say it, but I have no idea. So that is what bullish is. So if you hear somebody say the market looks really bullish, what that means is that it looks like it's going to be a buying market. It looks like price is going to rise. It looks like it's going to go into an uptrend. You hear somebody saying well, the market looks really bearish or bears are in control today or something like that, it means that the market it's going down. So, there's a lot of sellers in the market. So that would be what the candles represent. Green candles represent buying, red candles represent selling. You can always change your candlestick colors though. So if I wanted to change my candle colors to blue and red, which I can show you on my MT4, this is what I like to trade with, blue and red. Buying candles are blue, my selling candles stay red. You can change your candlestick colors to whatever you want them to be, but you just have to know, what the classic colors are, which are green and red or black and white. So basically that would be what the overall picture of just looking at the basics of your candlesticks are. Now, what I'm going to do real quick is zoom in, and we're going to start to pick apart the candlesticks themselves. So you guys should understand time frame, how you get to look at candlesticks. Like I said, we can even look at them from a monthly standpoint. So if I went on the month chart, that's from a lot of teaching I've done. We look at the monthly stand chart, every candlestick on here represents 1 month. So 1 month, 2 months, 3 months, 4 months, 5 months, 6 months. So basically you have, the sky's the limit with looking at the time frames. But basically, now that I'm kind of done explaining that, I'm going to go ahead and zoom in. We're going to start picking them apart. So first things first, every candlestick, and now you can really start to pay attention because these things are going to be some critical aspects. And I kind of be testing you guys, on these parts. So I want you to really start to tune in. And just like I said, make sure that this is your focus because it's going to pay you a lot to understand these things. So basically, candlesticks themselves, why are they called candles? Because they look like a candle. So, all of you guys should know what a candle has on it. It has a body. So if you think about it, just a classic long candlestick, you have a body and then you usually have a wick. So you guys see how they have those lines? And they actually have a line at the bottom and the top. Which is different from just a regular in-person candle, but still we have the body and then we have the lines, which are called wicks. And if you notice, all candlesticks look different. So literally, every candlestick has its own type of shape. It's doing its own thing. Some candlesticks are huge, some are weird looking with more wick than body, etc. These things are important. This is why I'm about to break it down. This is your first thing that you're learning about the Forex market and how to read charts, because candlesticks, they literally play a role in everything. So the candlesticks, they're telling us the time frame, so I'm on an hour chart. So this is 1 hour of data. So we can clearly see that buyers have been winning this hour, correct? So at 7 p.m., this candlestick is going to close. It's 6:53 right now. At 7 p.m., this 1 hour candlestick is going to close. So we can see that, like I said, price has been really strong. It's moved upward. But how do you know that, or how do I know that? As some of you guys are asking that. And basically, how I know is because candlesticks have 4 different things, really, that they tell us. So besides knowing the time frame of the candlestick, we know a couple different things as well. So the first thing that we notice about a candlestick is that it has, I'm going to change my color of my writing here. We've got a buying candlestick. And what it has on it is it has a full body. And some people like to call it a cube. So you guys see the cube on there. And the full body has what it calls the opening price, the closing price. And then the next thing we see is that it also has wicks. And wicks have the highest price and lowest price. All right, so we're going to point those things out now. So our bullish candle over here, let's look at this one that actually is currently moving, because I think it's cool to look at it while it moves. So first things first is that if we look at right here, and what should I get? A dot maybe? All right, so right here, do you guys see where my little black dot is at? That is actually, what we see real quick, the filled in part is the cube, so that should be obvious. I just want to make that clear. But where my mouse is at, you see the bottom of the cube? On a buying candlestick, price opens at the bottom of the cube. So price for that hour, and if you think about it, every hour a new candlestick starts. So literally, if you look at the last candlestick, and it'll make sense in a second, price closed down here on this one, but since price is rising, it opened here, and it should close somewhere up here. So on a bullish candlestick, price opens at the bottom and closes at the top, okay? So you look at the cube. Cube tells you the full story. Now, you can see we have wicks on there. So this should help you guys understand even more. With the wicks show us where price was at its highest point and where price was at its lowest point. So within that whole hour, we get to see pretty much the whole story of what happened, even if we didn't see the candlestick form, how we're getting to watch it right now. So literally on old candlesticks, I could go back and I could say, okay, here, on this buying candlestick, here was the open, here was the closing price, but here was the high, because look how high that wick is up there. See how high this wick was? It shows you where buyers wanted to be at. So at one point, buyers had the candlestick, it was filled and it was green at the top. But then sellers fought them back down. Remember, this is a game between sellers and buyers 24/7. While buyers are trying to push price up, sellers are trying to push them back down. So every hour or even every minute, it's a fight. Every new candlestick that opens up, it's a fight between them. So it's a really cool thing, because what happens is you get to see the strength of each party by the candlesticks. So literally, buyers opened here, closed up here. Here was where they wanted to be. And at one point, sellers had price down here at the lowest point. So that wick down there showed you that actually the candlestick at one point within that hour was red, and this was where sellers were. So buyers had a lot of strength, because what they do, fought them all the way up here and then closed somewhat close to where they wanted to be at. Does that make sense? And if you guys look over here to the right, you can actually, if you pay attention, you're going to see this candlestick moving back and forth. And what I'll do is even go to a 1 minute, but I just want to come over here and make sure you guys can all see maybe a live one. And is everybody else's sound good? Because I see one person saying that the sound disappeared, or two people, but I haven't seen anybody else say that the sound was messed up. Okay, so is this making good sense though? Everybody understanding so far about the opening, the close, the high and the low? All right, perfect. So just on a live candlestick, because it should move pretty quickly, I just wanted to show you guys. Ooh, see how it just jolted down? So this is what the market's doing. See how price just jumped down? Now see how it pulls back up? So a fight is happening, and you see how it created that wick? So the wick creates, and then see how sellers close down here, and we're about to hop over to what sellers do, but see how it closed right here and a new one opens. So sellers open up top and close at the bottom. They're just the opposite of buying candlesticks. So basically, let me go back to the hour chart and I'll make that make sense. We're going to go to selling candlesticks, and that'll be here. Selling candles. Have a full body, just no different than the buying, just a cube. And then we have, let me make sure I make it easy, the opening price. And I'm just going to put opens up top, closing price, closes, closes at the bottom. And then I'll put wicks equal highest price and lowest price, no different than buyers. So the only thing that changes on a selling candlestick is the closing and the opening price, okay? So literally what that means is, like, let's look at a selling candlestick from over here. Let's look at this one, and we'll do it from reference of the buying one. So see how on the buying, it's like buyers are walking up the cube. So we opened here on this buying one. Let me zoom in some more. We opened right here on this buying one, and we closed right here. And this was the highest price up here. That was the lowest price down there. Now notice that where they close at on the next hour, they open there, right? So it makes sense. We close here, we open at the same point because price didn't get a chance to move, right? Look over here, no different than a new candlestick just opened on this buying one, 7 p.m. What do we see? This is where they closed at. This is where they're opening at. So we closed right here, back to this one, close right here, opened here. Now sellers open up top though. They close at the bottom. See how sellers closed? Opened here, closed here, opened here, closed here. So while buyers are climbing up the stairs, sellers are climbing down the stairs. The wicks remain the same. And wicks are super important, guys, because basically the wicks on your candlestick actually tell you a lot. They tell you basically the strength of that party, meaning if there's a ton of wick, then usually what that means is that it's not as strong of a candlestick. Can you see the difference? See how this full body red candlestick was really strong and sellers closed pretty darn close to where they wanted to be at. Like they closed right here and there was their low. Whereas look at the next candlestick. See how sellers at one point had price way over here or down here, but then buyers fought them back up and there's a really small body and way more wick. That would be the difference of what we're going to move into, which is basically indecision versus decision. So now, should you guys, what I'm going to do real quick is test y'all, because I feel like testing is always a good way to move forward without having to, go back or, you guys have a ton of questions on it because it's a really basic topic. Everyone understand those differences between the selling and the buying candlesticks? And do you have any questions about them? Understand. Cool. All right. So if you basically understand that and you get that, what we're going to do now is just look at the difference between decision and indecision. So basically, candles, they have two types of candles. So now we're getting past color here, because color has nothing to do with indecision and decision. So candlesticks have two kinds. You're going to have decision candlesticks, and what I'm going to do is make them big. You have indecision, which equals way more wick and less body, aka less strength. And then you have decision, which equals mainly body and little wick, aka lots of strength, okay? So basically, why is this important to know? Well, isn't your goal in trading to be on the side of it's really to be always on the side that has the most strength, right? Like you wouldn't want to be trading against, and what I always use is sports. I played sports for a long time, so I feel like it's the best analogy to use. But if you think about a team, let's say if you're voting and betting your money, because this is what you're about to do. You're about to bet your money. So you want to bet your money on the winning squad, kind of. And you're just learning how to do it from a technical standpoint. So if you were going to bet your money, you want to be on the strong side of the fence. That's why it's important to pay attention to the strength of your candlesticks, because the strength of candlesticks move the market. So think about it. You have more wick, which is where they intend to go but can't stay, or if you have way more body, which is where they actually stay, where they, take price to, that means that they're stronger. So you want to be a part of the decision club. All right. So when you're trading, decision candlesticks play a huge role in your trading because they basically move the market. So decision moves the market. That's when a party becomes really strong. Indecision slows the market down, and it shows basically that there's a very, very strong fight between the buyers and sellers, meaning that one party can't take control. So, it's not a blowout match. When price starts to get really strong in one direction, you see way more of those candles than you do when price is kind of like having a hard time. Both parties are having a hard time because price is less, it's weaker. So somebody's trying to take control. That's basically the biggest moral to the story with candlesticks. So if you see a lot of wick, it shows you that neither sellers or buyers are in control. So basically, that should be very understood from you guys. And if you have any questions about it, now is your time to shoot them. because I'm going to go ahead and open up Q&A for that real quick. If you don't, then that's perfect as well, because we can just move on even faster. All right, so no questions. So basically, now that we understand candlesticks, I'm going to zoom out because you never would be trading this close to the screen at all. What I'm going to do is kind of move myself around here, and we're going to kind of move, let's see, zoom out. All right, I'm going to delete what was on the screen because I got to have room, guys. Now I'm going to zoom out, and we're going to actually get into trends, which is market structure. And it's really my favorite thing to talk about. Does your cord stretch far enough? It's my favorite thing to talk about besides support and resistance, because a lot of people, honestly, if you've been trading, a lot of people can't trade. Oh, wait, Hakeem just asked one simple question before I keep going, guys. He just asked, do the banks have anything to do with the movement as well? Yeah, they do, for sure, for sure. You know, it's money. So I mean, institutional banks and big corporations, et cetera, who have, you know, a lot of money in the market, they definitely do move the market. They actually move it. They call them like institutions. They move the market more than anyone else. We are considered retail traders, which we move like not a lot of the market at all. So like big drops like this have to do with like banks and stuff. Yeah. So they move a lot of the market more than we do. But what's cool is that we get to basically see what they're doing, and once they kind of signal us, we get to take action as well. So they kind of start the trend and then we follow it. But basically now we're going to get into market structures and trends. So market structure, aka trends, the patterns we must follow. All right, so what I was getting ready to say was that a lot of traders, honestly, they're not successful in trading or making money because they don't understand trends. They understand the basics of trends. So what they understand is like, yeah, when the market's going down. A lot of people even, a lot of people, I'll ask like, what, with my private clients sometimes, I'm like, hey, what's a trend to you? And they're like, well, when one candlestick is really green or, big and green, or when one candlestick is big and red. And that is not the case. A candlestick does not equal a trend. Multiple candlesticks in a direction, so multiple decision candlesticks equal a trend. So what that means is can you guys see how we have a trend here? And I'm going to start to draw it out in a second. I love to do it. Where the heck? I used to have the perfect, arrows, joy. Okay, so can you guys see here? We go down with tons of decision candlesticks. Then we pull up. Then we go down again. This is a trend. This is considered a downtrend here. And we're going to basically unfold why the market's doing that and how we can actually understand the doing of that. Like what causes the market to downtrend and uptrend. So basically, and what a downtrend has and what an uptrend has. And the dots on the chart are just TradingView's features. It's not anything. It has not an indicator or anything. It's basically different people's ideas in TradingView. Let me see if I can turn that off, actually, because that is like quite annoying. Honestly, I do not know how to turn that off, so we're just going to ignore it, or I'll go to a different chart soon. But basically, so the trends, yeah, you kind of can see people post their ideas, but the trend basically is made up of a couple different things. So you guys can see the first thing that it's made up of, that's why we just went over them, are candles, right? So trends entail candlesticks. So candlesticks, I'm just going to do one. Candlesticks create trends. So multiple candlesticks create the trends, though. And let me put that so there's no confusion. So what that means is that if there's a ton of the candlesticks that are going in one direction, what does common sense tell you? That price is headed in that direction, right? And I'm not talking about indecision candlesticks, I'm talking about decision candlesticks. So that should actually be a side note. decision candlesticks, because indecision candlesticks, those are not a for sure thing because they show you a lot more of the, messiness. It's not an actual decision that they're dropping price or rising price. So decision candlesticks, decision candles. Now, when you see indecision candles do play a role. So not only do we have, and I'm going to go through the two types of trends because we're going to do that. We have uptrends, which is when the market is rising. Probably that would make sense. Then we have downtrends for when the market is dropping. Turn that red. And they have characteristics, okay? So we have uptrends and downtrends. So the first thing that I'm going to do real quick, though, is I'm going to draw out with my handy dandy arrow here what most people think trends look like. When people think of a trend, the first thing that they think about is that the market goes like this with an uptrend, so just straight up, or like this with a downtrend, just like straight down. And that would be a total negative. I used to think that too. And if any of you guys have ever demo traded, the one thing that happens is that a lot of people get really scared in the market because they see what it actually looks like, and it looks like this. Pivot points, right? So we drop, we rise. We drop, we rise. We drop, we're rising. Now, the only difference between this one and this one is that we have pullback. So basically we get pulled back up. I'm sorry, this one I meant. A downtrend is that, we get pulled, even though we're dropping consistently, we're just getting pulled back up a little bit to balance out the market, right? So there's a fight that happens. And so, like I said, it's like a game kind of. When you're trading, there is no blowout. There's always the other team coming for you, kind of. They're always there. So have you guys ever been to a basketball game where, one team was just blowing another team out? Well, the thing is, even if the other team was getting blown out, they still got the ball. So they still were able to get the ball and get an opportunity to score, which means that more than likely they were going to get some sort of petty score, even if they weren't able to catch up. So they would make a layup every now and then, right? They would make a shot. So they'd start kind of, and this could apply for any sport, they start kind of edging their way back in, even if they were still getting blown out. They're still going to get that opportunity. Same thing in the markets. Even if one team is dominating, which in this case, this is a downtrend, so the sellers are dominating. You can clearly see that price is dropping. But what do we see? We do see price over here, where my arrow was, it rises up. So price, it doesn't drop like like it's just dropping, fully. It's not just going straight down when it's a downtrend. You have your pivot points. So these pivot points are called, and I'm going to go over here to really explain it, because I like to give you guys the illustrations differently from from the drawing, and then we go look at it on the market, in real time. But the pivot points, and this would be an uptrend. So should have made it over here. Here with my drawing. All right, so this would be the uptrend here. And then let me make the downtrend. And the downtrend would be different. The downtrend would be this. So see how even I'm not just going straight down. I'm dropping, then I'm rising a little bit. Dropping, then I'm rising a little bit. No different than how it looks over here. So what are these called? This is the second thing that we have within trends. The characteristics, we have what they call pullback. Or we'll start with continuation. Continuation and pullback. All right. So what are these? What is continuation? Continuation is the trending party. So what that means is if you're in a downtrend is when continuation of candles drop down. So we see a continuation of the candlesticks going downward. So like over here, this would be considered a continuation, right? Until price starts to do what? Pull us back, right? So continuation is always the trending party's term. So if you're in a downtrend and somebody says, yo, I think that price is about to continue, well, that means that it's probably done pulling back and it's going to continue going in its trending direction. So what that means is, like, if I come over here and I say, okay, cool, well, I think price is about to pull back now. The pullback is the non-trending party. So pullback is the less popular. Pullback, the candlesticks will probably be smaller. So pullback will be candles rising up, because we're looking at this from a downtrend perspective currently. So pullback will be the candles rising up. So here would be your pullback right in here. Here would be your continuation. Can you guys see how that looks in the regular market? We have a continuation here. So the trend. So if we wanted to sell, this would be a beautiful sell setup. We sold, bam, we just cashed out. Price dropped a ton of pips. Then here's our pullback. So when price is pulling back, wouldn't you want to be out? Because basically, you'd want to be out before price started to pull back on you. That means that it's rising back up. Now, the pullback isn't bad. It's another chance for an entry. So when price pulls back and it's finished pulling back, and I'm going to teach you some guys, I'm over here getting tongue-tied. I'm going to teach you guys some things about pullback to help you, understand it more, because it actually plays a huge role in your entries. So pullback happens, needs to happen, and when it happens, you can get another entry before the next continuation happens. So it's an additive flow kind of that needs to take place for the market to do what it needs to do. And it's just kind of like, remember that everything that happens in the market it's not a mistake. This is why I love teaching technicals, and this is why I sought out to learn technicals when I first started trading, because everybody's easy route is learning an indicator, right? Or someone else's strategy. But if you understand the market's patterns and its rhythms and why it does what it does, you'll never be confused on why it's doing something. So literally, at every given moment, you'll be able to figure out, oh, it's not by mistake. Structurally, this is what the market needs to do. But when I first started trading, I was 16, and I remember I was like, yo, every time I think it's dropping, I would be like, well, it was downtrending, but now it's uptrending. And, that's not what it is. Actually, that was just a pullback. So pulls back, continues. So that should be very, very clear for you guys. For a downtrend, you can continue down. And, it continues dropping down. And for an uptrend, it continues rising up. Now, what I'm going to do real quick, though, is there's specific things that they call them. So basically, when you have continuation, you have pullback. Those continuations and pullbacks create what they call for uptrends, they're considered higher highs and higher lows. And for downtrends, they're considered lower highs and lower lows. So I'm going to actually type it out so you guys can see exactly what that is and why I'm calling them that. So basically, let's start over here. And I see y'all questions, but I'm going to answer them at the end for Q&A instead of cutting myself off. So right here, let's say for this downtrend, and I'm going to type out real quick also. I need a professional typer who types for me. My husband's sitting right here, but he's no good, man. I'm just kidding. He's awesome. He's awesome. But all right. So continuation for an uptrend would be upward. Continuation of candles going up, and pullback would be pullback candles would be dropping down. So can you guys see the differences between the uptrend and the downtrend candles, or what the candles should be doing? For uptrends, we should see candlesticks, and I'll show you guys an uptrend in a second. For uptrends, we should see the continuation of candles going up, and then the pullback candles would be pulling price backwards, pulling it down. So like right here, we continue up, pull back, continue back up. For a downtrend, it's the opposite. So everything is pretty much opposite with selling and buying. We're continuing down, we get pulled up, then we continue back down. That's how it works. Now, these continuations and the pullbacks create what I was getting ready to type out, which are lower, high, lows. Well, let me do lows. And lower highs for downtrends. All right, which would be right here. So I'm going to show you guys on the downtrend real quick. Here's a high. Just pretend that the end of this little stick is a high. So a high point, so that y'all know what that is basically like here. See how the market peaks right here, kind of, from the previous low? And this will all make sense in a second because I'm going to show you. It's almost like the market kind of is like mountains a little bit. And if you think of it as like mountains, what that means is it's almost literally, you know, it looks, like I said, it has like some geographical like pattern kind of. And it's almost like, I like to look at the charts like they're a map. And so basically this is a high, or what some people like to call a peak. And if you think of them like that, it does help you because it helps in your trading. So you're like, okay, price just hit a peak or made a peak, and now, you know, it's going down into a valley. So price peaked up here and created a high, right? So we saw that last green candlestick before price started to drop, and price drops down all the way down here, literally, and this creates a low. So like I said, if we use this area over here just to see a more perfected look before I go into the candlesticks, you're going to see the high over here, and then price creates its low right here. So it stops dropping for a second and makes a low in here, or what you may hear some people call as valleys. So some people love to call it valleys. You know, they'll call them peaks and valleys. So price peaked over here, valleyed over here. And then we see what? A lower high. So does this make sense to you guys? Why it's a lower high? It's common sense, but some people sometimes have a little bit of a harder time with that. The lower high is basically why it's called that is because this high right here, it is a high. His buyers pulled price back up some, so they tried to create a high, but it's lower than this previous high, okay? So this is why it's called a lower high. So we see a high here, a low here, a lower high here. So what does that show us? Buyers are losing strength. This is what, so now downtrends should start to be making even more sense to you. It should start to kind of start clicking where you're like, okay, not only are sellers, you know, getting stronger and taking price lower, buyers are getting weaker and they're having a hard time pulling price back up to even points that price was once at. So every time buyers get weaker and weaker, they're having a harder time pulling price back up. So literally, here's the next low. So price goes and creates a lower low over here. So why is it a lower low? Somebody go ahead and just type it in the comment box and let me see how smart you are over there real quick. Because if nobody types it, I'm going to really feel a little discouraged. But somebody should get it. Right, it's lower than the low. Right, so it's lower than that previous low. And so that's how you consistently see it in the market. So now let's go look at it on the actual trend of the candlesticks, because candlesticks are a lot, you know, it's a little harder to read the candlesticks than it is to read me doing the little arrows there. But let's look at it from a candlestick standpoint. So on this downtrend, let's just start here because this was a high too. So here was a high, right? So a high point. See how buyers had price up there on the candlesticks and then price dropped? So our high was technically up here, but I'll just put it in here because this is where the full bodies are. Here's a high or peak. Here's our first valley or our first low. So does that make sense to you guys? Just no different than how I just drew those arrows. High to the low. Now notice what happens. This is continuation here, right? So we have a continuation. Let me make it a little bit smaller. All right, so continuation, boom. Then we get a low. So our first low is created within that trend. Then we see what? Pullback. Pullback happens. We top off right here. What does that create us? It creates us a lower high. Dang. Buyers are struggling. All right, hold up. Dang it. Yeah, buyers are struggling. So you can see they top off right here. They can't take price back upward. So it's a sad day for buyers because now they're having a hard time getting back up to where they once were. It's kind of like I said, once another team gets a very steep lead, pretty darn hard to, you know, kind of come back from that. And so what happens is they keep trying, but now they're straggling. So next thing we see happens here. This is another thing. We get a continuation. We get our next continuation downward, which creates us a what? A lower low. So sellers take it even lower. And they're like, cool. So can you guys see how much money, if you caught this trend as a trader, this is literally the easiest money you will ever make in your life. If you can understand trends, which is what a lot of traders don't understand, they just trade based off of candlesticks or, like I said, some type of strategy or something, then, they're missing out on the actual whole ordeal of what's really happening. If you can stay in from a continuation to up until they're about to pull back, you're going to make a lot of money. So then we can see, and you can get out at that pullback, because that's the biggest thing. A lot of people, then I'm going to end up having to teach you guys how to know when to get out when there's going to be a pullback coming, which is a very easy thing to understand too. And we'll get to that. But basically, then we see another pullback, which is here. And what do you guys notice? Does anybody notice anything about the candlesticks within continuation and pullback? What are the differences between the continuing candlesticks and the pullback candlesticks? And I'm going to delete my arrows real quick and see if you guys can come up with it, because that'll let me know that you're paying attention to. And anyone can actually unmute themselves too if you're tired of typing. Like, oops, what is this? Yeah, you can unmute yourself too. I don't even mind. But if not, all right, so I see we just got a lot of typers. So you see less wicks in the continuation. Yep, all right, so Trellis got it the best. Continuation has larger bodies, and the pullback has way more wick, and they're smaller bodies. So it's a very, very, very simple concept. Pullback candles tend to be weak, all right? Like I said up top on that first thing when I talked about it to you guys, they're indecision candlesticks. So look at it. See how it's like a lot of like, it looks weird and there's more of like back and forth color versus when price continues down and it's just big decision. Then we see what? Indecision pulling us back. Then we see continuation downward, which this was kind of a mashup. But the reason why it's a mashup, I'll tell y'all in a second, because the trend is about to reverse. But basically, this was the last low over here, technically, that gets created. And then now we can see price is about to start to move in a different direction. So basically, that is the basics of a downtrend. We have highs, lows, lower lows, lower high, lower low, right? Nothing else has been created right now. So that's what a downtrend is. So how to know when a downtrend is over? A downtrend is over when it stops making lower lows. Can anybody think of why the lower lows are more important than the lower highs in a downtrend? Stops creating lower lows. Ooh, I'm running out of space here. I'm gonna have to delete some stuff while I'm waiting for y'all to type. Can anybody think of it? Man, I'll give somebody $10 if they can think of that. No, my husband's like, me too. No, you know what it is, darling. Okay, so let's see, lower. That $10 got y'all typing. All right, lower lows keep you in profit. That's the indication of the trend, the lower low. Okay, so you know what? I'm kind of feeling Cece's answer. Cece's answer is probably the best answer to me. So I will be PayPaling you $10, but also but also that's the indication of the trend, the lower low. He just made a really good point. The indication of the downtrend, why the lower low would be more important, is because price is going down. So when sellers fail to make a lower low, they're kind of showing you that they're getting weaker. Okay, so what that would look like, I'm going to draw it out for you guys, is like this. And I'm going to actually, I didn't mean to delete that last part that I did, but either way, you guys can see it right here. Let me delete this line in the middle and this line in the middle. So what would happen is if price was ending its downtrend, it would start to look like this. And that's the reason why I was actually saying that I believe GBP USD is done downtrending, because it went up and it made a higher low over there. Price kind of would look like this. So it'd make a lower high still, but when the lower low doesn't get created and it does that, See how this would be a lower high right here, but then this would be a higher low. Sellers just showed us, and I can show you guys how usually it looks when price gets ready to reverse. Sellers just showed us that, hey, we're having a harder time going lower than that previous low. So what it shows us, I'm sorry, it's a higher low. So they're showing us that, hey, we're running out of strength. And usually what happens after that happens is this. And can you see how that's how the market gets ready to reverse? And I'm going to show you guys when we go to the uptrend next, how uptrends do it as well. So that's kind of actually how the market starts to reverse. It'll show you by showing you that, hey, I'm no longer strong enough to make this lower low if they're in a downtrend, or hey, I'm no longer strong enough to make higher highs, can't get past this low. What do we see? A tilt in the strength, and then buyers catch that win and they take the game. So it's kind of like I said, a blowing out, a team that was blowing a team out, other team catches some wind and starts coming back on that team. And then, what do you know? Next minute you have a tie game. Next minute you have, my husband and I have been watching the Olympics, and it's a perfect scenario. Swimmers, what we noticed last night is like certain swimmers will have the game on lock for like the whole swim, and then out of nowhere, the other swimmer starts getting real close, and then out of nowhere, they beat them. And so it's the same thing in in a trend kind of. Sellers can have the whole game on lock, but the minute that they weaken up, kind of like a swimmer, they weaken up a little bit, and then the other person catches that win. The other trending party will catch that win. So buyers are coming for game, they're coming for the throne kind of, and that's what happens when a trend reverses. So it's a really clear indication. I think I can actually go back real quick before I switch to showing y'all uptrend movement, how it happens on a selling market when it's actually really happened. Let's see if I can scroll backwards and show y'all something. Completed version of it though. All right, so this could be the perfect scenario. Or actually, let me go to my clean chart over here. All right, so this is AUDJPY. It's a very clean chart. You can kind of see, if we look over here, can you guys see how price was downtrending and it made this last low over here? And then look what happens. It made that lower high because this was the previous high. So lower high, but then look what it does. Makes a higher low, so in here. Then it goes up, makes the same high, higher low. Then we made a higher high, higher low, higher high, higher low. So can you guys see how that trend literally switched out on us? It went from in here, bottomed out over here, switches totally up there. And that's kind of how it happens. Now we're in an uptrend. So this is how the momentum tilts. And that's kind of what you'll see in trending. So like I said, we're going to kind of get through uptrends real quick, and then you guys will understand two of the main trends, and then you'll also understand what I'll teach last, which will be consolidation. And then I'm going to go through questions, and we'll have completed basically 2 modules in like an hour, which is amazing. But is everybody understanding everything so far besides the questions that I have not answered? Okay, so let's see. That is awesome. Now let's roll into uptrends. And for some reason, everybody in the market wants to be a buyer because they feel like buying is more powerful. I actually love selling. I don't know why I love selling setups. I feel like the market drops steeply. But what you guys will notice is that it does drop steeply. You'll see a lot of big drops in the market. And then you'll also see kind of like with uptrends are smoother. So uptrends kind of take multiple candlesticks to rise, whereas downtrends, they just drop it off. So they're a little bit different in their characteristics. So you'll start to know as a trader if you like trading uptrends more or if you like trading downtrends more. I like both because they both make you money. But either way, I'll leave that over here, and then we'll go through and I'll just kind of like bullet point all these, but I'll X out downtrends. We don't need to know that anymore. So uptrends. So uptrends literally are the opposite. Let me go find a bomb uptrend real quick. Should I scroll all the way back to here? Or should I just go to, let's just use GU. I'm trying to get rid of a chart that has, I'm switching charts real quick, y'all. All right, let's just use NZD USD. So this is the New Zealand dollar. PETA, I think it was PETA. PETA should know about this, right? This is the New Zealand dollar right here. So basically, we have an uptrend over here. So this would be the US dollar trying to equate to the New Zealand dollar. And our dollar is actually more valuable than the New Zealand dollar. It takes about 71 cents in US dollar to equal 1 New Zealand dollar, just FYI. But here we go, we have an uptrend. So uptrends have what we call lows, or higher highs and higher lows. So here's a low, or an AKA a valley in here. Can you guys see that? Price is valleyed. Then we see what? Price goes and makes a high. And can you guys kind of see the difference of what I was talking about? How with downtrends, price just seems to drop like crazily, and uptrends are a little more gradual. They kind of make that smooth movement. So we have a low here, and then we rise up and we stop right here. So this is about 1, 2, 3, 4, 5, 6 candlesticks, 6 hours, which this was a lot of pips. This was about 500 pips or so, which is amazing. That could have equated to $500, $1,500, a couple stacks, doesn't matter. It could have been a lot of money, for anybody, just off that one little trade there. So from this low to this high, you can see how price moves. So we have a high up here. So that's the continuation. Now we're hitting pullback. So what are sellers doing? They're pulling us backwards, right? Pulled us back down, but notice something. From this low to this low, we have a higher low. So we are now getting to see that sellers are way weaker than what the buyers are. So we have a higher low right here. Here's a low, here's a higher low, here's a high. Now notice what buyers do right here. They take complete control. There's not one red candlestick out of these 1, 2, 3, 4, 5, 6, 7, 8, all the way up to this high. That's the next high. So that's a huge high. And that's the next high right there. So bam. And then we get a higher low, which is right here. So again, sellers are really weak when the pullback happens. They just can't pull back much. And then we get a little bit of a higher high, not too much of a higher high. It actually tries, really it's about a same high, which this is the perfect example to you guys to see the switch of a trend for a second. So right here, we have a same high. And remember what I talked about, just no different on a downtrending market. Whenever price fails to make a lower low, that trend ends. It's the same thing in an uptrend. Whenever price fails to make a higher high, or it makes a same high, it's giving you an indication that it's slowing up. So you want to be mindful. This is where chart reading comes into the picture, and you guys are like, now you can see why I'm getting so detailed, because I want you to pay attention to your candlesticks. Pay attention to the wicks. If price is not able to get much higher and it's creating the same high, like if I even put a little bit, people still registering for the meeting. But even if I put a high, like a line right here, which you guys will see, same exact point. So not a higher high gets created, a same high gets created, which shows us buyers are weak. They're having a hard time getting past that last previous high. So basically, yep, it's a double top, Peter. They'll be confusing the people out here. They don't know about those patterns yet. But yeah, it formed it's a known pattern in the market called an M or a double top. And so basically it forms right here. And then we can see the reversal happen. So what happens? We now see buyers weaken. Sellers gonna make a lower low. Here's a lower high. Here's a lower low. Then price actually sits here and it reverses back up again, and it makes so basically we had a short-term downtrend here, but the uptrend did end over here, okay? And that's what you want to pay attention to. So you would have been out as a buyer, you would have been stopped buying, because why would you buy if you know that price just made the same high? You wouldn't. So that's the key. You got to know what ends that uptrend and what ends that downtrend, just as much as you can be, as bomb at knowing what a trend actually has in it, which are the lower lows and lower highs, or the higher highs and higher lows. You want to be just as proficient mentally to see a chart and be able to say, okay, yeah, this is ending because I can see it weakening. So being able to see the weakening of a trend is your best friend, because you will not, there's a joke in the market. Well, it's not really a joke. It's actually like a saying. And so it's like, the trend is your friend. A lot of people say that. When I first started trading, I would hear it all the time. Corny people would be on webinars and they're like, the trend is your friend, and the trend is your friend. But the trend is your friend as long as it actually is that trend, because the trend can make you lose a lot of money if you're trading the wrong side of it. So you got to always know what your trend is, and you also have to be mindful of if it's going to continue. So that is both types of trends. You have uptrends, you have downtrends. It's a very easy market to understand. And the last thing I'm going to cover, and then I'm going to go through these questions because I see a lot of them, and then we're going to take a break. But the last thing I'm going to cover real quick is consolidation. And consolidation is the third type of trend. Consolidation is the devil, basically. I'm just joking. It's really not the devil. It actually helps you. Everything in trading helps you. Like, it's kind of like nature. I hate bugs, but I know that bugs do good things for us. It's kind of like that's what consolidation is, or that's what pullback is too. They help with the flow of the market. So, basically what you'll see is that with consolidation, I'm going to X this out, and X this out, X this out, X this out. And I'll have blueprints and notes for you guys, so you don't have to worry if I'm Xing this stuff out. I actually have like screenshots of all the stuff that I teach. But basically, with consolidation, we have equals when neither buyers or sellers are in control, the market tends to move sideways. So it's basically when the market starts moving sideways. Like, you see how over here, I'm going to just box some areas of consolidation because it's the easiest way to get you guys to see it. So consolidation is this. See how neither buyers or sellers are in control? The market's kind of just in between that box. And when price is trending, or when there's a true trend, we see pivot points, right? So we see no pivot points. We see basically confusion. So the market actually consolidates 75% of the time. See that? No true trend. But what consolidation breeds are trends. So if you notice, the market goes from trending one way, and then it consolidates, and then it starts trending again. And so consolidation creates trends, though. That's why we love it. So out of consolidation, blooms trends. All right, so basically that's why we love it. And you got to understand consolidation. You have to know when the market is consolidated. It's basically when price isn't able to make consistent higher highs and higher lows, or if it's not consistent to make lower lows and lower highs. How do you know when the market stops making, or how would you know when it's out of consolidation? Well, it's going to break out and actually start making higher highs and higher lows, or lower lows and lower highs. So kind of let's look over here. You see how price couldn't continue with a nice pattern? What it did was actually, it was like Here was a high, here was a low. Here was the same high, here was the same low. Here was a lower high, here was a higher low. Here was a same high, here was a lower low. Here was a what? Lower high, or basically the same high if you look at that wick. Finally, we break out and we go make a what? Lower low, right? So basically, price has to go make a way lower low or a way higher high. Has to break out of that conformed box that it's kind of in. And what you'll notice is as we start to get deep and more technical, look at the wicks. The wicks usually show us where that consolidated point is. See how this is the highest wick up here? And these two are the lowest wicks. Price had to either break past that wick or that wick, and it broke past that wick, and it went and broke out. So basically what I like to do is put boxes around my consolidation just like that, and when price breaks out, it's a go. So you kind of can see it. See how price in consolidation is actually patterns too. That's why when Peter made a joke about the double top, it's a pattern. It's a consolidation pattern. See how in here, price is consolidated. It doesn't have one solid pattern. It has both patterns mixed up, intertwined. So price being consolidated basically is the mixture of both trends. Neither party is in control. They're both fighting to get control. And that's why you see that mix up or kind of price getting jumboed in the same area, keeps doing the same thing for a second until finally one of them takes control and initiative to break out of that little area and, you know, go make a lower low or go make a higher high. Does that make sense to everyone? Okay, perfection, perfection. All right, so we just made it through all of that. Trends should be very clear to you guys. You guys should be experts in trends because I think I covered literally every little thing about them. That's important, and same thing for candles. But now I'm going to scroll through those questions real quick, and then we're going to take a break. And I'm going to answer these questions before we all take a break. So let me roll back up. Trying to get back. All right, so the first question I saw about pullback was that pullback could mean pulling price up or down based on candle pattern strength, right? So Mo was basically just asking, does price, it basically, I think I cleared it up in the questions. Price in an uptrend, when it's pulling back, quote unquote, that's sellers pulling price down. Price in a downtrend, when there's pullback, quote unquote, that's buyers pulling price up. So basically it's all in reference, pullback and continuation are all always in reference to what specific trend you're in. So always keep that in mind. It's not a one specific thing. It's about what trend you're in, and then it kind of, confirms based on that. Joshua asks, how do you determine when a pullback will happen? How do you know when the pullback is done for a re-entry? Great question, Josh. Both of those things actually are contingent upon what we're about to get into next, which is the second phase of market structure, and it's called support and resistance. And basically, support and resistance is everything. It rules the world of trading. So that will be answered with support and resistance. But basically, the entries have everything to do with support and resistance. Why price pauses where it pauses has everything to do with support and resistance. Everything has everything to do with support and resistance in trading. And until I learned that, I was not profitable. So support and resistance is going to be the most important phase of our training. I'm going to go like hard with support and resistance because I got to make sure y'all understand that. And you'll get it. So basically, let's see. Where's the next question? All right, same question. I already answered that to Ashley. Is it good to use the fib to spot bet the pullback entries? Fibonacci is used for bigger retracements or pullbacks. It's not an every trade thing. Support and resistance is much better to use for just the average pullback. I'll show you guys what fib is good for, definitely, but it's not for everything. Sometimes pullbacks are created when they bounce off a minor support or resistance. I'm sure she'll cover it. Oh yeah, Jakin just went in for me. That was like the perfect thing. All right. So are you saying that the buyers wanted to get back to previous high from lower high? Thanks. I don't really understand that one as much. Um, but I think I had to have covered it. So Mo, if you don't understand that, then can you retype out what your question was there? And I don't see any more questions about anything. Oh, somebody asked, is it the same technique for 1 and 5 minute chart too? Yep. Everything that I'm talking about on any time frame applies to another time frame. So always keep that in mind. Trading is not, even if you trade binary, this applies to binary. If you trade futures, this applies to futures. If you trade stocks, this applies to stocks. So literally technical analysis applies to any time frame, anything. All right. I might have to watch this a few times. That is cool. You watch it as many times as you need to. In consolidation, if price moves past the highest or lowest wick, will that determine the direction of the trend? Well, price needs to close past it, not move past it. So see how until we get a close past that point, closing price indicates what it's going to happen. So when a candlestick body literally goes and bodies past that consolidated point and closes past it, that's when price is determining it. So it needs to go make a way lower low with the body, not the wick. Really want to get support and resistance down. Hope we cover as much as possible. Yep, we will be definitely covering support and resistance. That's my favorite thing. So that's going to be definitely covered, really. You'll be super handy in it. So let's see, last question. When entering entering a trade, do you base your decision off one reversal candle pattern? Okay, Rashad, that is not a part of this module. So we'll get to that when we get to that module. I got you, boy. You said I remember that the buyers had a high and the sellers pulled them down to a low, then the buyers pulled it to a higher low, but not to the original high that the buyers wanted. I hope that makes sense. Okay, well remember, buyers only pull price to a high. So buyers wouldn't pull price backwards. So buyers make higher highs or same highs or even lower highs, but they don't make lower lows. They can't make a low because they're not, pulling price down that far. So lows are created by sellers. So just remember, what ends a trend is on an uptrend, it would be what? A lower high. And sellers create the lower or the higher lows within the uptrend, and that indicates that sellers are weak. So whenever you see a higher low in an uptrend, that means that sellers are weak because they can't pull price back downward, whereas it's the opposite in a downtrend. So basically that should make sense to you. Buyers don't do anything that sellers do. They only pull price up. That's their goal. And it looks like that is the end of the questions. Okay, really quickly. That example is on a 60-minute, but couldn't we look at a 15-minute, see if the candle closes out of consolidation on a 15-minute or 30-minute based on the waiting for 60, or us use the time frame is everything. I'm definitely going to cover that. 15-minute is a little bit shaky. 30-minute is where I would suggest. 15-minute, you can jump down to it for more detail, but that's kind of for entries. So be patient because I'm going to get to those and really break down what you should be doing before you execute a trade. And those are the little types of things that you can do. Jump down to a lower time frame to make sure that price is actually, at that point. So I got y'all covered. Don't worry. But what I'm going to do real quick is it's 7:55 almost. What we'll do is we will break until we'll break till what? 7. Let's do 7. Let's just do 7:04. I mean 8:04. My bad. We'll do 8:04. So a 10-minute break real quick. I'm about to go grab some water, and then we will come back and we're going to start on support and resistance. So make sure you have your notepads ready. Make sure you have any questions ready, and I'll be back in a second. I'm going to mute myself, and yeah, I'll see you in a sec. All right, Jadero's back, and I'm actually watching GU because I have a trade in on it. I can actually post it in the listening because it's going to be a good example for what I use for support and resistance in a second to teach you guys. But I have a trade going on it. I'm going to try and take a picture of it really quickly and send it to the group on Facebook so you guys can see the support and resistance element in a second. I'm going to use it as an example. Right here. But basically, what was I going to say? Basically, the biggest thing that we're about to get into. Oh, and real quick, I'll answer your question. I know this isn't part of the webinar, but isn't anyone using the Telenex broker? I mean, honestly, Ashley, I've heard of a lot of people using Telenex. Because you're overseas, right? You're in Aruba, yeah. So that's actually a good broker for you. But yeah, in America, a lot of us use Traders Way. That's just our preferred broker. But yeah, Emmanuel will say, oh, he's from San Diego, so yeah. Obviously, you're getting a lot of good feedback for that broker. But either way here, what I'm going to do is actually, is everyone back before I get going? Okay, let's see. Okay, cool. So a lot of you guys never left. Cool. Okay, awesome. So mainly everyone's back. Majority's back. So my trade actually just hit the take profit. You guys can see price just started skyrocketing on it, and I had a take profit right here. But it was a great trade. My entry was somewhere down here in the middle. So I basically caught a good amount of hits. But it hit my take profit. I'm going to use the trade as an example in a second. So basically what we're going to get ready to do is go through support and resistance. What is support and resistance? How does it work? You know, what is it? What is it basically going to help you with? Because it's going to help you with everything. And the crazy thing is I was trading for a long time. I started out trading binary options. And I was on the 5-minute charts, you know, serious about them 5-minute charts back in the day, and I could never get my consistency with the lower time frame. I mean, yeah, with those lower time frames. And I actually just used to trade like this. Like I would be on a low chart and I would just be looking and I'm like, okay, you know, I knew kind of to enter on indecision. So I would usually enter on an indecision candlestick. And for those of you who are like in my group, you probably, you know, heard me talk about the reversal candlesticks, which are indecision candlesticks. So let's say I found like a candle that looked like this, then I would buy on that at a low point and, you know, ride it for 15 minutes on a 5-minute chart. So I'd be like 5, 10, 15. So that was like my strategy back in the day for binary. And, you know, it was kind of the same concept because if you notice, this is a low over here. Price went, made a high, pulled back, made a higher low, then price just took off. Now, mind y'all, the trade that I just put in, man, I've been in this trade since earlier from this low point right in here, right, literally right in here. My entry was like right here. And I've been in, so at one point my trade was all the way up here this morning, and I was like, all right, cool. Then out of nowhere, consolidation happened, and it's going to make some really good sense to you guys in a second after we cover support and resistance, why price consolidated and did what it did there. So basically, support and resistance is why it consolidated, and we are about to cover that. So any questions that you have pertaining this module, like I said, you know, hold out on them until the end, but keep typing them consistently. Like, you know, as long as no one unmutes themselves, I don't care. So if you have a question and you're like, yo, I want to know what this is, then go ahead and type it out, and then, you know, I'm going to get to it. But I'm going to start typing out my points about support and resistance. So basically, the market has a pattern, like I said. And this pattern basically is that it pauses at certain points on the chart. It's like almost a map, like I said. And so there are points that it has to stop at. They're like checkpoints. So if you guys think about kind of like how the peaks and valleys form, the peaks and valleys are like checkpoints. And price has to pause at those checkpoints. And when it pauses, it has the option of doing two things. It has the option of totally reversing, or it has the option of continuing. That's how we get what? Continuation and pullback, right? So basically, why does price stop in those places? Well, it's called structure. That's what a lot of people, form it as. And I actually went to a Forex webinar, not a webinar, what's it called? A seminar in person. I went to a Forex seminar, and the guy was talking about structure, and he was like, structure leaves clues, blah, blah, blah. And I'm like, what? Like, I didn't understand anything he was talking about. And structure is basically support and resistance. And what it looks like is like this. People use lines to map out support and resistance. So we're going to get into the actual details of support and resistance. But basically, they look like this. Let's see, I'm just going to go through. I'll just use those two lines. I'm not going to do too much. We'll start there for now. So basically, support and resistance. And I'm just going to put market structure. And I'm going to try and talk really slow because a lot of people get lost on this. And you know how I was like, oh, a lot of people aren't successful in trading because of the trends? No, a lot of people aren't successful in trading because of support and resistance. They have no idea how to trade it, what it is, barely. They know the basics of literally like, oh, when price hits a line, like that's kind of like their, analysis on it. And basically I'm going to break it down to the simplest form so you guys really understand it. Market structure is support and resistance. And so support and resistance So if you guys think about what I'm going to do is walk y'all through an analogy. And some of you guys have been in my group. Let's see. What we're going to do is walk through a quick analogy real quick. So if you guys are sitting in a room or a house, most of you guys are, if you look up, you have a ceiling. That ceiling is your resistance, right? Because you can't physically get past that ceiling, right? So the ceiling is your resistance. If you imagine, everybody imagine having a ball in their hand and you threw up the ball. So if you threw up the ball, what would the ball do? Does anybody know? You threw up the ball and it hit the ceiling, what will it do? It's going to hit the ceiling. Yeah, okay, so yeah, it's going to fall down. So good job. Y'all are all like genius, man. I love y'all. So it's going to hit the ceiling, it's going to fall down. So when it falls down, basically it's going to just come back to either like it'll fall back in your lap or it'll fall back to the floor. And so when it falls to that floor, the floor is supporting it. So the ceiling is the resistance in that room and the floor is the support. All right. So literally that's what price does. Picture price as the ball. So look at what price did right in here. Let's just look from here. Price rose. This is pullback. So from this low, price rose from that support, hit the ceiling, right? All right. And then it's going to break it, the support. And you guys will understand this in a second because in trends, price does break the support and it has to. Just no different. Well, in a downtrend, price will break the support and in an uptrend, price will break the resistance. And we'll get to that in a second. But basically, if this was just the basic room, let's just keep it 100 and stop there. And why do I keep people's ideas? They're killing me. But so if price just was from this floor, the support, and then rose up to the ceiling, which is the resistance, when it falls back down, it breaks the support and falls to a new support, okay? So very simple concept here. So can you guys basically understand what support is? Support is the bottom of the candlestick. So any area or place that price consistently sits on top of. So like, let's look over here. See how what's resistance over here is actually support to the left? And this is why structure is so key. It's not a mistake. Anything that happens in the market happens on purpose. So basically, it's like a map. price revisits these places on the map consistently. So nothing is just, happening. If you can usually what you're going to do is try and use a line to figure out where price has been before. So every place that it's paused at, it's been there before. Can you guys see over here how price is starting to break this resistance now? What's because it's resistance because it's above it. So as soon as price is beneath this line, which is support for these candlesticks, what does it become for these candlesticks? Resistance now, right? Because the line is above those candlesticks. So same thing for, if we look over here, how when price was, and I'll kind of go through gradually again and draw another line so we can start to make sense of this. Because then we're going to get into another analogy that I'll use. So structurally, look at this. What is this line for this candlestick? What is this line being used as? Does anybody know? Since the candlesticks are beneath it, what would that be considered for it? Yep, it's resistance. Okay, cool. So this lower high met a resistance point, and this is why I'm using it, because you guys are going to understand for your trends why support and resistance is so important. When you're trend trading, you have to know where a resistance is and where a support is. When you know that, you're basically able to plot out where the end of a pullback will be or where the end of a continuation will be based on support and resistance. Because what's happened in the past happens in the present. So literally, price repeats itself. The market literally uses these same places over and over and over and over. And our lucky tails get to use a line, a basic little line, to point out where price will probably go revisit, pause at, and then continue or pull back or wherever at, because of being able to use these lines. So basically, where I'm drawing these lines at, even though all I did was just go found this peak to put the line there, if we look back to the left, what's resistance for these candles right here, it's support for previous candles on a totally different day. So on the 2nd of August, this was support for these candlesticks. But now on the, what would that be? The 8th of August, it's resistance, okay? So support, resistance. Notice over here, and it's a major area. So kind of what I'm wanting you guys to understand is that what makes the line strong or valuable, because you can't just go put a line anywhere and call it resistance or support. There has to be multiple candlesticks that have touched that line previously. So like literally, if price is paused at a certain place multiple times, we're going to see, all right, here it is. We have a support here, resistance here. If you look in here, I'm going to show you guys again. Here's resistance over here, support right thing. If we would stop bringing that up, support over here. I'm going to zoom in so I can. And look, if I wouldn't have had to take profit, your girl would have been way in the money. That's sad. But but either way, we have a resistance here, support here. Let's see if I can get something that won't stop me out every time we have support here. We have resistance through here. See how the candlesticks are beneath it, resistance, resistance. Then we see what? Support again, because price is on top of it. Then we see what? Resistance, resistance, resistance. Look at that, resistance. Then we see what? Support. Then we see what? So I have never seen any of this chart. I just put that one line there. Support. Then we see what? Another support. So can you guys see how price keeps using that same area? This is all the way back to July. That would be the 15th, 18th, somewhere in there. Of July, that price was still using, and now we're all the way to the 8th of August, and price was still using that same area. So does that make sense to you guys, how basically price can move beneath or above the line? It doesn't mean the line can't get broken. What it means is that it's an area that price can pause at. So even if we use a support level and we say the same thing, if we look at a support and we see what, like just no different than see how this support got broken because it was resistance over here. But what you're gonna see is I actually could have put another resistance line, because look, multiple candlesticks touch that. So a resistance got broken right here, and then it breaks the next resistance. What it'll probably do is pull back now because it's starting an uptrend. Remember when I said I felt like GU was reversing? That's why I had a trade in on it. So it'll probably go up. It might touch this resistance or so, and then it's going to pull itself back. And you'll see the start to a new trend, because what we'll have from down here is a low to a higher low, higher high. Higher low will go make a new higher high. So what you're going to see is that support and resistance is basically, it's a method to understand where the pullbacks and the continuations will be at. And you'll understand why price pauses at the places that it pauses at. So that's the first thing that we use it for. I'm going to stop and answer some questions because I see that they're piling up real quick. Let me use the same one. Oh, no. Let's see. And how did I get to bold? And how did I go? Okay. One, we use it for knowing when price will continue or pull back. All right. So that's the one reason we use it for. Two, I'm just going to write a fact about it. Facts. Anything above any line you draw above a candlestick or multiple candlesticks is considered resistance, okay? So anything above candlesticks, so anything above it, because like I said, remember, think of it as like being in a room. So anything above those candles, it's resistance. If there's a line drawn there, it's resistance, right? Above it. Now anything beneath it, jump down again, beneath it, the candles, is considered support. Here's another fact. I'm just going to breaking down the facts here. Candles can, not only can they will break through supports and resistances. They have to trend. So it's not that they won't break through, guys. That's what I want you to understand, because you're seeing it on the chart. They have to break through those lines. But if you notice, when price is on its way up, it's going to meet resistance areas. And when price is on its way down, it's going to meet support areas, okay? So basically, let me go ahead, pull this. There we go. Let me just pull this up a little bit because I'm going to get through now. And I'm actually going to go through and try to get these dots, because the dots are really killing me here. Like, they're really killing me. I'm going to move to my MetaTrader 4 and go ahead and show you guys, because I'm seeing some of the questions and it's everything that I'm about to cover. So I'm going to move to my MT4 real quick. Bam. And I'm going to show y'all a really good example of price breaking through and everything that I talked about. So I'm going to go through and show you guys. So support and resistance. If I look right here, what's this area? This is a support area, right? Why? Because multiple candlesticks have fallen into with this area. So a lot of people ask me the simple question, where should I put my, my support line? Like, where should I draw it? Well, you're looking for a couple things. You're looking for multiple touches in the same area. So candlesticks to kind of be aligned in the same area. And remember, wherever you put that line at, there's no magic line that you can draw. Because all of us, if we all sat here and tried to draw support and resistance on the same chart, guarantee you it's not going to look the same, because all of us have a different eye. We have a different eye. So we're going to look at the chart differently. But the key element is that to draw a strong support line or a strong resistance line is that you look for at least 3 touches to that area. So if I notice I have more than 3 touches, 1, 2, 3, 4, 5, 6, 7, 8, bam. All right, cool. Doesn't matter if a candlestick breaks through the line at all. The majority of them have wicked it. So that was a major support area. And if you guys notice, it was also the reversal of that trend. Remember what I talked about that? So usually support and resistance will show us when price is actually done trending as well. That'll make sense to you in a second. So what I'm going to do is actually, I'm really, really proficient within my support and resistance. It's one thing that I do, not to brag on myself, but I'm a pretty great support and resistance trader. But it's because I've actually, it's so stupid, but I am. I mean, that's how I've made a majority of my money, just to be real with y'all. I had to study this to the T. That's why I'm so passionate about it. And if you get it, you're going to make money. So that's why I love it. But basically, so in here, this is another area of support and resistance. So somebody else that wasn't as keen, they may not have noticed that. Why did I notice it? Because it's a pausing point. So if you look, see from this support to this resistance, look backward. This is a support point in the past, right? With multiple touches. So nothing happens by accident. That's what I want you guys to get. Wherever candlesticks pause at or peaks at, or if you see a peak or a valley at that area, put a line there and it's going to show you why it paused there. You're going to find something in the past that shows you why price is pausing there currently. So look, resistance here, support over here. Boom, makes sense. All right, we draw another line. If I come up here, same thing. So looky. We got support in the past. Then we got resistance here, support here. What is that? Another support, right? So I'm also going to get into showing you guys how we're using it during the trend in a second, once I get enough lines. So I say, okay, cool. Now look at this next area I'm going to go to. Right in here, what do we have? Resistance here, support here, okay? Bam. So now it makes sense. That should make some sense to you guys. And support in here. So just notice how all the candlesticks are using this area. Now in the peaks and the valleys, that's what's most important. Now look here. If I wanted to figure out why price pulled back to this point, if I put a line there, what am I going to find? Oh, it's so cool. We have support right here, but we have what? Resistance here, resistance right here, support right here, right? So if you look back to the left, what happens on the left, price is going to use that area on the right, all right? So basically, again, what do we see here? And I'll be done, and I'm going to start to use it for the trend in a second. Why does price go and peak up here and make a higher high right here and stop and then pull back? Well, if we look back to the left, what do we have? Resistance, right? Support. So we have multiple touches to that area, a pause in that previous area. Now go look. Let's go ahead and go again. I love doing this. It's so fun. If I come up here, price kind of paused there and then pulled back. We can see what? Resistance, support. Now, and I'm adding multiple lines to really get detailed here and show you guys. Sometimes I don't draw this many lines. Sometimes I don't want that many lines in my chart. But resistance here, okay? So price goes and makes a higher high there. So let me delete that one. So delete it. Let me just go use this one. Bam. So I look back to the left, and honestly, I have no idea why price did that, because it's just really kind of like it's not really anything in there. So let's see if I can go back and find something. Oh, see that top line? Price used it as support before. Support, resistance, more support. So I'm all the way back in June. I had to come back to June to find out why price paused at that point, that specific point. You guys are going to see that as I keep going. It's pretty amazing how price literally uses these same areas. So I'm going to come all the way up here. Bam. What's support for me on the right is resistance for me on the left. All right. So now we are totally up we're totally up to speed over here. We got this figured out pretty smoothly. And we can understand why price has paused at every single point that it's paused at and used every single point. So now let's look at why during a trend, how this is effective for us. It's going to answer literally every single question you guys had. I'm talking like every question. So type this out. Support. Let's make it aqua. All right, so we had a support right here, but we also had a low, and this is what I wanted you guys to see because this is the start to an uptrend. So I'm just going to put L for the lows, okay? Nothing fancy. I'm going to make it bigger. So here's a low right here, right? Right, a low on top of a support makes sense. Then we see what? Price rises and it breaks through resistances above you, right? So if you notice, it breaks through one resistance and two resistance, and it finds its third resistance point. Whoop, not bad. Getting the lines here. Finds its third resistance point to top out and make its first high at. Do you guys see that? Before pullback happens. So one candlestick pulls us back, and let me go ahead and text label this. I'm gonna make it H. So a high happens here at a resistance, and then we're gonna see what? So the two resistances from the past, now they're actually gonna be support because they're beneath the candlestick, right? So what happens is that pullback pulls back to the previous resistance and it uses it as a support. This is why support and resistance is so effective for you. Does that make sense? So basically, when we pull back, everything that was above us is now beneath us, and now it's actually our stepping stool within that uptrend to become what's going to basically propel us upward. So basically what you're seeing is like literally no different than what I just talked about in the beginning of the webinar. I said, hey, remember, buyers are basically stepping upstairs, kind of. So we see what? And like I said, that's why I always use the analogy of a house. If you think about it, if you went from level to level to level to level, let's say we were all like billionaires and had just like mad levels in our house. Well, you know, we'd have to have a lot of levels to equal out to the chart. But either way, if we just think about it from that standpoint, every time that price went to a new level, so it climbed 2 levels basically, or 3 levels, and then it revisited 2 of them and used them as support. Next, that's how we get a what? A higher low. So our higher low gets created at the previous resistance that's now our support. So is that making sense to everybody so far? Higher low. Awesomeness. Okay, cool. So basically, then we see what? Another one. Another one. So basically what happens is that, you know, again, we get continuation. What happens is we go make a higher high. So notice, guys, we don't stop at that previous resistance point that we did the last time. We go to a new resistance point, right? Why does it use that area? Because look to the left. It's an area that price has paused at previously. So all you have to do literally is be good at mapping out where price paused at previously, and I guarantee you, you're going to have a very darn easy job of trading. That is how I trade on a consistent basis. Like, I'm going to show you guys my last trade in a second. Once I get through this module, I'll post it at the end in our little group. But the trade was awesome, and it didn't take a ton of brain work because I know support and resistance so well. So, and I know trends really well. So basically, we see what? We go make a higher high right here. Bam, bam. At a new resistance level. Now, watch what price does. Price actually goes back, and see how price used this support? The next time it uses this support. And what it actually does, this time it kind of struggles. It actually sits, and it does make a same high, but then it kind of uses that support, makes a same low. A higher low, and then it goes up and makes a higher high. So this kind of got a little weird in here, but all you have to do is know how to map it out. Because if you'll notice, it didn't start a downtrend. For it to start the downtrend, it would have had to go, it didn't end the trend yet. So it went and just made basically a same high within that area. And then what it would have had to have done was make a way lower high, not a way lower, just a lower high, period. And then we would have seen the trend end. But instead, it went and made a higher high, made a same high within that same area, like I said, in there. And then you're going to see that pulled back and uses the support. So, okay, Well, Miss Tanika, you're asking how do I know when it's paused? Well, you'll see where it pauses because it won't go past that point. So you see where it kind of keeps going to the same exact area? Here, here, here. Like 3 times it tried that same area and it stopped. That's how you know when it pauses. See over here? Like, so the pause comes from the candlesticks touching the same point. That's a pause in trading. But basically, then you kind of see, so then the pullback happens. Then, like I said, so finally we pull back, we make another higher low again, right here. Bam, bam. Okay. Wait, man. All right, and then now we see what? Continuation happens again. We gonna make a higher high, new resistance point. Bam. How does it use that next resistance point? Well, how would we have known? Well, if you put a line, there's only another area, which was right here, 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 right? So that little next area was the previous pause point for price, which means that you could have mapped that out by drawing a line. So literally, you could have looked up and said, okay, where was that next area at? Like, where would the next area be that price could possibly pause at? This is how you can map out where you should be pulling back. I mean, where price should possibly pull back. So let's say we bought, let's say we bought right here. Or let me see if I can use a different, let me map this out fully for you guys before I go into that. So pullback happens, we use the previous resistance as support. See that? It's a very simple concept right here. Here was your high, here's your higher low. Support now, previous resistance. So that one happened beautifully. It would have been a great entry. Higher low, right in here. So if we bought this, there's only 2 places that price can go right now, okay? So remember, you're looking to buy in an uptrend on the higher lows, on the pullback. So when price pulled back and we saw that what happened finally met the previous resistance as a support, that's your buy trigger. You're looking to get a buy within that area. Does that make sense to you guys why you're looking to? And also why support would be, or critical, resistance and support would be critical for that area? Because then it's letting you know before, before it even happens, when price hit that resistance point, your target would have been to say, okay, I'm gonna wait for price to reverse back to my previous resistance point and use it as a support. As soon as I see it start to, rise up a little bit, I'm gonna get a buy because what do I know now? Price is done reversing. Also, we're gonna get into it in a second once I get to entries because that'll be next after this. But basically, you'll see that literally price just went on up and we can bet that it should go make a what? For an uptrend to continue, it has to go make a higher high. So price went on ahead and went to the next resistance point, which was right in here. And like I said, sometimes it's going to make us, it takes a second for you to what I'll say is that trading is such a it takes a while. It takes a while to sit and draw support and resistance. I would literally sit on my computer, doing anything. I could be talking on the phone and I'm sitting there marking up support and resistance every night because I wanted to get good at it to where I can mark a screen up, in 2 seconds, literally I can get on there and be major key, major point, major pivot point. I can really see that, but that's because that's been 3 years of me sitting and doing the same thing over and over. So if you guys really take your time, you're going to start to be able to basically just find support and resistance really easily. And that's how you'll be able to know where your entries and exits should be on charts. So basically, also, the biggest thing is too, you won't sell yourself short. I can't tell you guys how many trades I used to be in, and because I didn't know support and resistance, I would get out so early. Because when I bought, I'd be scared and I'd get out on this blue candlestick after it rose 10 pips. And I'd be like, I'm good. And then, really I should have stayed in until up here because guess what? Price was in a major uptrend. So price was so strong, I should have held out because price was going to break that resistance to go make a higher high, which it needs to do because that's the rule of the market. So basically, one thing that I want to point out is, you have to let go of fear. And I wish that's why I say a lot of you guys, even if, we're not going to be able to cover, it's a 3-hour webinar, that's why I charge so little. But the point that I made in my last intensive that I hosted in March, I was able to work with everyone for 14 hours, 2 days of just, mad teaching. And one thing that I kept talking to them about was fear. In trading, the biggest thing is that you're going to have to control your emotions. If you let your emotions get the best of you, I guarantee you will not make money. You'll fluctuate, or you're going to have really great days where you'll be feeling super mighty and, super risky. And then you'll also have those days where you're super scared, and all of the comprehension that you even may know about, charts and stuff will go out the window. And you'll go with basically like instinctively, you'll just be like, well, $20 is good enough. Close out, and then I guarantee you'll see like the market go exactly where you thought it was going to go, and you could have made, $400 or something, and you're going to be pissed. So the biggest thing is learning how to control those emotions and following the market's rules. Follow what the market is showing you and what you know about what the market should be doing until it shows you different. It's kind of like the quote. Basically, it's kind of like, I can't remember this thing. It was Oprah. She said, she starts people at 100 and she lets them do the deducting. And that's kind of how the market is. You got to take the market's word for it. So if you know that uptrends make higher highs and higher lows, and the market has consistently made higher highs and higher lows, when you take an entry, trust that the market is going to go make that higher high, okay? If you're in a downtrend and the market is consistently making lower lows and lower highs, well, if you enter at a lower high, trust that the market is going to go make a lower low, because guess what? If you don't, you're going to sell yourself short. Then you're going to be one of those people who takes, 40 trillion trades trying to make $100 in a day, and it's going to suck, and you're going to waste like a lot of the time. So really, really, like I said, take heed to that. If you're like watching this and it's making sense for where you should be getting entries at, wait for it. Hold your trades long enough to actually see the, product of what you just put in the analysis for, because it's so much more worth it. So basically that's what your support and resistance is for. You got to trust it. So price goes up, like I said, makes this next higher high. Price pulls backward again, and it actually doesn't use the same exact point line that I drew. It actually uses like this little area right here. But what you guys will see is something that I talked about in the beginning when I started talking about support and resistance. Support and resistance is not a line. It's an area of price. So basically, it's not a specific price, because every line that I draw is a specific price. If you guys look over here, every line that I place is a specific price. It shows us specifically that price point. That's not what the line is for. It's to show you the area. So keep in mind that every time that you draw a line, really what you're looking at is for price to be in that area. There is no magic line that you can draw. Yeah, like Rashad said, it's kind of like a zone. Like, it's not that specific point, because if you look at it as a point, what happens is people get really caught up on the point, and they're like, well, it hit the exact, it went past my exact line, and now I don't trust it. No. Area, area, area. So it's literally looking at that area for the detail of it. So you're saying, okay, did it come back to this area? Yes, it did. Which, if I put the line there, this would have been the little area. See how this is still an area here and here? There's still support points, which makes sense for why price used it as resistance right here, and then a support right here before it rose up again. We go make a high here. Now look where price tops off and does a big pullback. Can you guys see? If we look at the resistance right here, look to the left. Major support gets hit. So this area of support was huge. Now what I will tell y'all is that price is probably going to rise back up, and it's going to go test this area, because this is where price really was sitting. There's just a couple wicks thrown here, right here. This is where price was really at. Now notice up here, this is how I plot out where price can go next. Resistance, right? So a big old resistance area in here. Bang, bang, bang. So if I was trading this as an uptrend, because it still is technically a big uptrend, it just had a big retracement, what I'm going to look at is that I'm going to say, okay, it paused for a second, because look what kind of happens. It made a lower low technically. But all it did was technically came back to a previous resistance, and now it's kind of using it as a support, right? So it's not really a huge deal that it's down there. A lot of people would freak out, but if you kind of watch that, this is actually going to be a pretty good buy opportunity, because guess what? Even if I bought this from right here to right here, I'm going to still make some money. Even if I bought it from here to here, you still make some money. Even if I bought it from here to here, I'm going to still make some money, right? But guess what? Price probably is going to go ahead and shoot back up and retest this resistance point. So that's a key for you guys to kind of be able to see where price should plot out, because you can use the previous points on your chart. From all the way up here, I was able to find that. I'm saying, okay, cool. Look, resistance, resistance, support, 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 all the way back to July, which would go way further. And what I'm going to do is actually scroll back so you guys can be in awe of how big support and resistance is. I'm in June, and look at these same lines that I drew being used for other trends. Every place pretty much. This line right here, resistance, support, support, resistance, resistance, support. So it's beautiful how it looks. Like it's literally like I said, nothing happens on accident. It all happens literally specifically for a reason. So support and resistance is huge, and if you learn it, it's gonna accelerate your trading. You're gonna be a really great trader based off of it. So I'm gonna give you guys an example. Let me see real quick if I have a downtrending example. And then I'm going to open up for questions on support and resistance. And also, I'm going to go back and keynote the important things that I talked about with it. Oh, okay. One thing I want to cover real quick too. So we know that there's all these lines that I draw. You know, see all these big lines. I mean, you know, all these middle lines, kind of just in between. These are kind of what they call just regular support and resistance points, right? So pretty much all of in here to in here. But what you'll notice about the different lines, which are right here and right here, these are major support and resistance lines. So this is a major resistance, this is a major support. Now, your question may be, why is that? Well, the reason why is because, can you guys notice the two things that happen with the lines right here and right here? Does anybody know? I feel like giving away another $10. Big old reversal, yes. So not the candles, no. You look at the big picture. The lowest point was over here, and it caused price to reverse. Highest point was over here from previous uptrend, caused price to what? Reverse. So literally we have two similar situations. Price is in an uptrend over here, reverse down, because it met this resistance point, couldn't go any higher, boom, drops down to a low support point. So these are what they call major resistances and major support points. Majors you're able to find them on the 4-hour. So look how low this was. Right here on the 4-hour and the daily. Woo. Dang, well, it's so boxed up. Hold on. I'm going to have to go and show you guys on a clean chart. Let me open it up. I wonder if I can find GU. Let me show you guys some major support points and major resistance points. Right here, major resistance point. Why? Because you're probably going to find it on that daily. See right here? 1, 2, 3. So 3 touches on that daily or basically 4 touches. Huge point for price to have reversed at, because it couldn't get past that. And I'm deleting that line so I can go draw it again. Same thing for, let's look at it up here. Anywhere I can pretty much find on the hourly. So right in here, same thing. Let's see. Oh, I was going to try and use a support example, actually. That was my bad. Right here, support, major support. Why? Can you guys see the different trend? Literally how it reversed from a downtrend, consolidated in here, went into an uptrend. Look at the daily. What did it find? So major support went all the way up to find its resistance point, dropping back down to the major support. Probably it's on its way on the daily. And look at this also. What's support right here is resistance currently for us. So a drop, pullback, meets the previous support as resistance, probably going to continue on down again. Does that make sense to you guys? So these are just the key ways to find important things, basically. Major support and resistance. If you're wondering why price is consolidated and it's super low, like how it looked over here, where I drew that line. Let's see. Somewhere in here like that, or anywhere on your chart. If you're wondering why price is stuck, meeting the same area right here. See how that's a major resistance point? Price keeps touching it. Boom. Cannot get past that price point. Major resistance. Always notice that what happened from it. We reached up to it, reversed on down. So the trend switches, finds a support, major support down here, reverses back up to the major resistance. So everything in between is kind of the fun part in between trading it. You're like just getting to ride the wave in between everything. So that's kind of what happens with major resistance and major support. And then all the other in between lines are kind of like how I had it on the hour chart over here. They're like this. They're the in between pivot points where you're taking your trades. So expect consolidation at major resistance and major support, or some sort of reversal pattern to literally reverse the whole trend. So I am going to now open up for questions, and I'll also be pulling up a downtrend example in a second. So questions. Go ahead and shoot them if you have any about support and resistance. And remember that you'll also have tons of content. Well, really, you'll have a couple good videos for being able to follow up on this as well. So I'll have some good stuff for you guys too. But let me know if it's making sense and how you feel about it. Okay, so you can use a day chart and just color it differently. But okay, Ronald, not sure, but I'm not on Fibonacci yet. So well, I don't even know if I'm going to be able to cover Fibonacci, honestly, because we're about to work on entries. But I do have a video on Fibonacci, so I'll make sure that I get that to you. But it's not a part of the curriculum fully. So it's definitely, I'll get to that if I can make it to it. But basically, you said can you draw a different color line to map out your basically major support or major resistance? Yeah, I mean, you can if you want to do that. What I would do is still use your lower time frames to find it better, because sometimes the daily can have you a little confused. So I would definitely still use the major, that time frame that you're on, and then go up and look at it. Yeah, definitely you can get major, any 4 hour or daily you can look at. So don't be confused. You can use either one. It's up to you. But it's easier if you're trading from the hour chart to find it on the lower time frame. That's just my advice. Yes, you never draw consolidation. You never take a trade in consolidation. No, you got to wait till it breaks out. So see how over here, we didn't take a trade until probably around here at this higher low, because price finally broke out and closed past this consolidated area. Says, yeah, patience, that's all. When drawing lines, should we stick to one chart like our chart and not switch to charts? Yeah, it doesn't mean that remember, trading is a freestyling thing. So it's not, I don't want you guys to get so rigid where you're like, oh, I can't look at a different chart. Go through and look at them. The best time frame it depends on what time frames you're trading. If you're trading hour charts, then definitely the hour chart is where you should be trading your support and resistance. Drawing your support and resistance. You want to stay as close to price action as possible. So don't veer away. If I'm on the hour chart to trade, I wouldn't go draw support and resistance on the 1 minute chart. See what I'm saying? Doesn't make sense. So basically, you want to stick to your time frame. So it's kind of like that. Those are common sense things. If you're looking at an hour chart, you want to be on that chart to find what's going on the hourly. Make sense? Okay, you're jumping ahead on me, Ashley. We're going to get to entries in a second, guys. So I just want to make sure all the questions are fulfilled about support and resistance. Anybody have any more questions? You do type them out, type them out, type them out. No, she's all right, cool. So now we are going to go ahead and move on to the beloved entries. Okay, so we're getting into entries now. Yeah, that's what we're about to work on. So I'll kind of cover the time frames that you can use for entries. So hold your horses, because I got y'all. All right, so basically we've made it through. We've made it through. Hallelujah. So I'm going to do something real quick. I'm going to X out all of this. And I'm going to talk about entry points. So first things first, what we're going to do is use everything that we learned. And I remember I told y'all that indecision would come back and it would be something that we used, big time. Indecision is actually something that we use a lot. And why we use it, because basically indecision gives you entries. Indecision candlesticks are basically what they call reversal candlesticks. So reversal candlesticks are basically, they are indecision candlesticks. It's no better, no easier way to say it. Literally, they are exactly that. That's why I talked about them so much in the beginning, because I wanted you guys to be able to recognize them and know that they are used for something. Because decision candlesticks, we know what those are used for. Those are used to what? To go ahead and make moves with the big trending market. But what do the indecision candlesticks do for us? Because we see what pullback does for us. Pullback gives us an entry. So indecision candlesticks are kind of the little dog, and they actually give us entries as well. And so basically what I'm going to do is just chart this on out real quick. And all right. Now, what I will tell you guys is that reversal candlesticks is a huge topic. So let me just tell y'all can do as much research on indecision or reversal candlesticks as y'all want to. Like, if I went online right now and started typing, like, let's see, and Rashad, y'all can see that my inbox and stuff is always blown up. And that's why what I was gonna say is that if you look on Google, let me see, I'm just gonna Google Forex reversal candlesticks, and you'll see why I say don't focus on this as so much. Forex reversal candlesticks. I don't know why my search engine is Yahoo, but just because it's Yahoo, that even shows you no one even uses Yahoo, and you see how many pictures of reversal candlesticks are up here. So literally, reversal candlesticks, there's like tons of names for them. This is a chart, I think, right here. See all these names, like all these different stuff. And it's crazy. Like, people seriously spend their lives like studying that. And I was one of those people. When I first started trading, I would like go OD, and I knew all the names of reversal candlesticks. Like, your girl was pointing out like left and right, like how you see down there. I was like, Doji, Hammer, Harami, Engulfing Candle, Shooting Star, like all these different candlesticks. And then like it kicked in for me, and I'm like, well, somebody created the name of the candlestick, and that's it. They literally found what the indecision candlestick looked like, and then they named it. And then now someone had given me a book, and it was like 120 something candlesticks you need to know. I mean, reversal candles you need to know. And I thought that that was what I needed to master to trade. And it was so false, because it had my mind focused on something so stupid that I didn't even need to know. I don't need to know the candlesticks by name. What I need to know is what is the common quality. Common quality is what? Every reversal candlestick by name is an indecision candlestick, to make it as simple as possible for you. An indecision candlestick is what? Candlestick with a little bit of body and a lot of wick. I don't care what it looks like. I don't care if the body is in the middle of the candlestick, the middle of the wicks, or the top of the wicks, or the bottom of the wick. If it has tons more wick and a small body, that is an indecision candlestick. I don't care how it looks, okay? So the different looks of them are why people name them. But really, if you really think about it, why do you need to name it if you just know what one looks like, and you know where they should be appearing and what you should be using them for? Makes it so much more simple. So now we cut out the aspect of having to know a candlestick by name and all this different stuff. No, we just focus on what are the characteristics of all reversal candlesticks. They all have one common quality. They look like an indecision candlestick, which is a lot of wick, a little bit of body. So boom, that's what I focus on now. I don't focus on all of that stupid stuff with all those different names and all that other stuff because it's all stupid. And basically, once I got that, I was just like, dang, man, like I became a way better trader. So basically, I'm sorry, I got like so passionate about that because it's just crazy. Like people are so serious, like with those books. People be making a ton of money off of the books too, and I'm like, man, I need to write a book about just it being an indecision candlestick. But basically, you know, if you really sit and think about it, now we're gonna say, okay, cool. So we understand the common things that help us get entries. So what I'm gonna do is now I call this my ideal trade checklist because you guys are pretty hip to the skill set that you need to have now to take trades. So an ideal trade checklist. What do we need to do to take trades? So this is my trade checklist. And where a lot of traders fail also, and this is why I'm talking to you guys, because when I say a lot of traders, I was one of the traders. I never had a list of like what I needed to do before I just took a trade. My mind used to be like, all right, get on the chart, see a green candlestick, buy. You know what I'm saying? I had really no list or any type of thing that I really did, like a, you know, like I said, like not a schedule, but a list, checklist of what I was doing before I took a trade. So I put together what I call an ideal trade checklist. And I have this is the simple one, and then I have a more in-depth one as well that I'll send all of you guys into the group. But basically, an ideal trade checklist is this. It's what you do when you get on your computer to set yourself up to take a trade. So the first thing that we covered, which was the first main thing, is we want to know if we're in a trend, right? Because if we're in a trend, doesn't that mean we can trade? Because if we're not in a trend, we can't trade. Trend? So that's what I'm asking myself. I'm like, yo, do I have a trend right now? Because if I don't have a trend, then more than likely that market isn't for me at the moment. Like if I got on and prices like this, it will be for me at some point, but not right now. Make sense? It's like I can't touch that because it's consolidated. So I'm like, dang, this is gonna be a great setup when it drops or rises, but I don't know yet. So I have to be patient and wait. So I go find a new market. Now, when it does start trending, let's say I came back 2 days later and I'm like, dang, prices started to trend. So look, right over here, we get our first high. So let's say it's just a miracle and I get on and price is at that trend. I mean, you know, it's making that high. I'm like, all right, cool. So I could take a sell because what? It's a lower high. So it's broken out, closed. Now we got a lower high. So price is pulled back. So if I wanted to sell it down here, right in here, and I can draw a support point. Before I'm doing any of that, what I'm doing is using support and resistance. So that's the next thing that happens. We draw support and resistance, or I call it implement support and resistance. I'm just going to put S and R to make it real simple for you. All right. So you have to implement your support and resistance. If you're honest with yourself as a trader, you're going to notice that you don't do any of this before you start trading. Most of you guys, in all honesty, probably just get on and you just, like I said, we're like me. You just get on and you're like, what's going on? You know, and you kind of go off of exactly what's happening right over here. And then you make your decision, right? And so that's not what you're doing. This is literally it's a craft. So it's kind of like, you know, no different than any other. It's like a sport, how you run plays. You cannot just get onto the court and freestyle, right? Like that doesn't happen. You can't get into, you know, you can't do anything. There's usually some sort of strategy behind what you're doing, even if you know how to do it well. So, you know, basically you implement that support and resistance. So that would be me literally coming on here and I'm going to delete this box over here. And now I'm going to implement my support and resistance. And bear with me with those dots because I know they're annoying, but y'all still should be able to see the peaks and valleys. So what I'm going to do now is set myself up so that I don't have to go back and fiddle with any pivot points. I'm going to know where the pivot points are beforehand. So bang, here was my major resistance up here. I'm going to go through here. Here's support. Look what price used right there. I'm going to come in here. I'm like, okay, cool. Keep coming down. Here's one in here. Price went and skyrocketed past that. Here's one in here. All right, here's one in here. And can you guys see how every point makes sense pretty much? There's one in there. There's one in there. There's one in here. Size it up a little. There's one here. Here. And as I get to where current price action is at, I can come in here. There's one right here, which makes sense for why price. Dang, these stupid dots. Killing me, girl. I can actually go to a regular chart as well and do this too. So I'm gonna do. There's one here. And then here's one here. Here's one here. All the way down here. So I just did that in like, not long. And what you guys will see is that it all makes sense and it helps you. So now I'm mapped out because guess what? I know that the next point that I could expect price to go to would be what? See how, remember what I told y'all? Price was probably going to try to get here. And it tried, but it made that high and then it closed out down here. But notice the next candlestick is opening up pretty strong. And it looks like it's going to go try and get up there by the end of the night. So what I like to map out and do, and you guys can kind of do this too, is actually if you're trading on TradingView or even if you're trading on just a regular MT4, take your paint tool or an arrow, whichever suits you, floats your boat. I take it from where price is currently at and I mark out what I feel like it's going to do. So I say, okay, price will probably resist here because look to the left, resistance here, support here. Previous support there. So price is probably going to make its high and top out here. All right. And then it's probably going to pull back to either here. And what I do is make one arrow and I say, or a second arrow, 2. And that would still be a higher low. Either one would be a higher low. Those are my 2 pullback situations. Okay. So remember, once pullback completes, your girl can go ahead and take a buy. I'm waiting for price to go ahead, hit the resistance, because I don't want to buy now. Kind of late for me to buy. This is a mistake that a lot of you guys make as well that is probably hurting you hard. You're not mapping out where you think price will probably pull back to. So you're probably just like, or you're buying way too late or selling way too late. That's also the thing. So if you know where a resistance is at, why would you buy right near a resistance point? Doesn't make sense at all. So never buy if you're close to a resistance point. Never sell if you're close to a support point. It doesn't make sense. You wouldn't want to buy or sell right near where price has a possibility of pausing at, okay? Better to be patient, wait for price to go to the next area, touch that support or that resistance very thoroughly, do its pullback, and then you can get in on a pretty much guaranteed rise or drop, okay? So that's a big flaw in trading, is just that people get impatient and they're like, you know what, forget it, I'm about to buy. What happens? They buy near the resistance and price literally hits the resistance and rejects them. It's like, literally like price being blocked. So that's not what you want to do. So be patient. So literally you got your setup though. It's a beautiful setup. Either way, here to here or here, I'm good. I'm waiting for a buy at either one of these areas. So what you do is you say, okay, cool, I might get a buy here, I might get a buy here, I don't know. But what you need to wait for when the buy happens, after pullback, you should see a consistent indecision. Oh, dang, this is huge, man. I gotta make it smaller. Indecision. Dang, hold up. Struggle. Indecision candlestick. Candles. Yeah, let me make sure I say candles, not just candlestick. I'll put candlestick. Or a few candles form on top of support or beneath resistance, depending on what trend you're in. All right, so this is what should happen. You should see price either form. So like we'll look at it from two different ways. So in this downtrend over here, which was right here, you see how right in here, oh man, see how like right here, I'll delete that. See how right here, after price got done pulling back, it hit this resistance point, and then you guys see how it kind of formed like one indecision candlestick, but then this one actually touches the resistance. And then finally we see a mini one again, and then finally we see the gradual, like, you know, dropping. Well, a couple people have been asking the question of, okay, so where would you look? I mean, could you look on a lower time frame? And the answer is yes. So sometimes the hour doesn't show you enough of the like indecision. Here it really did. So what I would have done was sold right up in this area. So, you know, you can do two things. You can wait for a candlestick to close out as red if you want to before you sell, like in a downtrend, to see how this was a lower high at a resistance, and that's what caused me to take a sell. And I had an indecision candlestick right up at the resistance. So not in the middle of the resistance and support, at the resistance point, okay? Price has to literally show you that it has braked at that resistance point before you just take an entry. Don't just be like, oh, I know it's coming up, sell. You don't want to do that. You want to see price literally slow its tail down right when it gets to that point. And we're going to get to stop losses in a second, guys. So don't worry about that yet. I just want to get your entry points good first, because stop losses and take profits, they have to be, you have to really get your entries right before you even want to worry about that. So basically, you're going to see that the resistance point on your downtrend will literally be your lower high, which will be exactly where you want it to be. So you're waiting for, it's in an order, just no different than, like I said, it's your trade checklist. So you're saying, do I have a trend? Cool. Do I have pullback at my resistance point to go ahead and now wait for what? Consistent indecision candlesticks or run candlestick to form at the resistance for me to take a sell. So in reference to the buy, it's over here. We would wait for what? Either an indecision. So we want to see major, like right in here with, let me draw a box. We want to see price pause and fiddle in this area, you know, with some indecision candlesticks, and then we would buy, because then we know if price has finally slowed down. If it jolted through that line, well, here's our next area. Because remember how I told you guys sometimes price just jolts? Sometimes it jolts through and you're like, whoa, and then it found the new, you know, support area. So if it stopped at this support area and started giving us an indecision candlestick, we're going to buy it. If it jolted through there, then our next point would be here. Make sense? So we'd wait for support to be found there with some indecision candlesticks, and then we would buy there. Either way, the trend is still in a full effect. It's still a higher low. We still made a higher high. So if we bought, boom, we would wait, and we'd probably suspect price to go to either, remember that it can sometimes get stuck and make a same high. Doesn't mean it's going to make a higher high. So even if we bought, that would have been an amazing pip move, because I'm going to start showing you guys in money from 300s all the way to the 900s, almost to 1,000. So it's about 600 or 60 pips, you know, or 600 micros. So that could have been a lot of money. But price should go make a higher high. Where should it go make its higher high? Up here somewhere, especially after a nice pullback like that. So basically, I plotted it out because I have support and resistance already drawn for me. So it's a very easy plot for me to say, okay, here where my entries should be based on all of my things, and here's where my outing should be. So once you know your entry, you should always know where your out would be as well. How do you base your out? You base it based on support and resistance. So see how I went up and found the next resistance point, because that's higher than my last one? Does that make sense to you guys? Okay, cool. Cool. Any questions about entries before I start moving to stop losses, take profits, and things of that sort? Y'all are easy. Nope, nope, nope. So trend lines. Oh, yeah. So we can use trend lines real quick. A trend line is another thing that you can implement. I like that question. Trend lines are literally support and resistance, actually. They're just the diagonal form of it. So we can see if we can implement a trend line. So bam. So if you guys don't know how to draw trend lines, don't worry, I'm about to teach you, and it takes like 1 second, literally. So trend lines are basically a diagonal form of support and resistance. What does that mean? They are drawn diagonally. So no different than how support and resistance is drawn horizontally classically. So trend lines are drawn diagonally. So they help you find the trend. Keyword, trend line. So, basically what you're looking at is you're connecting all the peaks in a downtrend. So see how on a downtrend you have like this peak from here to this peak. And if you notice, see how the trend line plays as resistance with the regular horizontal line? So we have two resistance lines. It's kind of like double confirmation of support and resistance. So you see how you have resistance here, and then my trend line plays as a resistance too, because what is it doing? It's above the peak. So see, even over here, see how this horizontal line is resistance, this trend line is resistance too. Then we come down here, resistance as a trend line as well, horizontal line is resistance as well. See how we meet over here? So they're intersecting, but they're being used as the same exact thing. We see down here, all the way down here to this next peak, horizontally at about a 45-degree angle, we get what? Horizontal line is a trend line. My diagonal line is a trend line. Now, this is where it can get tricky. Sometimes people get really confused, but even over here, it basically was hard. I had to stop around right here because anything else I would have been forcing it. So right here was about the last point that I could really draw that line. I got to start a new one, but you can still see, what is it right here? Connects to the peak at this resistance point at the lower high perfectly, and it uses it as a resistance as well. So you notice price does not break my trend line at all. If I use it again from right here at the same point to just draw a smoother one, see how price connects? It's resistance here, resistance here, resistance here, right? It connects with all of the horizontal lines again. What if price pulled back? Well, the key with that would be, Rashad, is to see if price totally breaks. Let's say, for instance, price went like this. And does everybody understand the trend lines? Because they're really simple, but I just want to make sure y'all do. So if you wanted to plot out a trend line with live price action real quick, this would be what it would look like, kind of. It'd be something like that. See how it's going to catch the support in all the areas? Support, 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 or support. Either one. But just to make sure that was very clear to you guys and you see how it works and what you should be doing. If you're in a downtrend, you should always draw your resistance or your trend line from up top at every peak and try to connect it. No forcing it. Sometimes people's trend lines look like this. That's why I say if you don't know how to draw them, you can have a hard time. So take your time and look for the areas you can connect it. See how I didn't try to force another one? Oops. See how I didn't try to force, this one to drag all the way through because I knew it wouldn't have made sense. It didn't fit. My line would have been all over the place now and I wouldn't have been connecting. So I stopped my connection here because that was the last place that it could really connect at. And then I restarted it. And where does it look? You see how it fit perfectly? So again, what was comfortable for me. So I'm not going all over the place, doing the most, trying to connect a trend line that doesn't even work. And, like I said, like causing myself a headache. You want to just draw from the places that are comfortable. But the peaks and the valleys must connect. And the biggest confirmation is using it as resistance or support. So for the uptrend situation, here's the uptrend. Low to low. So the valleys, valley here, support, support. So you have two lines that match up. Same thing, it's just diagonal support. Why we use it? Because the market moves diagonally. The market doesn't move straight up, it moves diagonally. So being able to use the trend line is just another tool in your bucket. How many candle closes and what time frame do you use? Okay, so it doesn't, support and resistance has nothing to do with candle closes. You're just looking for 3 to 4 candles to have touched that line or area. And it doesn't matter. Support and resistance can be used or found on any time frame. So it's not really contingent upon like any of that. But you're just using it for what time frame you're trading. So like I said, if you're on a 1 minute chart, but you're looking to trade the hour, you wouldn't be using the 1 minute to draw support and resistance. Does that make sense? And do you guys understand support? I mean, the trend line, like using it for double confirmation to see if your support and resistance is correct? All right, cool, cool, cool. So basically, now with entries, all right, so cool. So entries making good sense to everybody, feeling a little bit more confident about your entry points and what exactly you should be doing to enter. All right, good, good, good. So, and don't, and y'all better know that I'm gonna be like keeping up with everybody, because I want to basically see your entry points and stuff like after the webinar too. So the group, why I made that chat is because I wanted to see exactly who was like on and stuff, and that way, you know, you guys can send homework to the group, and like say like, hey, you know, I just took an entry. This is what my entry looked like, because now we know exactly what our formula is to enter. We really do. Everything else besides this checklist is straight, like this is pure technical analysis that will help you make money. Everything else that, you know, you see other people doing, people are using like harmonics and, you know, Fibonacci and all this different stuff. Let me be very clear. Fibonacci is awesome for Fibonacci is awesome for for when you're trying to get a little bit more technical, a little bit more, it's a little bit more, actually what I will say to you is that it's so much more confusing because it's used for retracements and pullback. But what you're kind of, what can happen is that you'll start relying more on Fibonacci, and it doesn't happen as consistently as just basic support and resistance happens, which is just what you can do with your eye. So a lot of people try to, you know, use Fibonacci before they even know support and resistance. Learn Fibonacci, which I actually have a video on that you guys are going to get. Learn Fibonacci after you master your support and resistance. It's the simplest way to do it. Harmonics, learn that after you learn Fibonacci. So everything else is kind of after this. There are things that you can add to your list. You see how literally within 3 hours we covered learning stuff that a lot of you guys, I mean, you know, I don't know if you guys are proficient in it. Some of you may be, but some of you guys, this could have been like life-saving for you to actually now know exactly how to enter in trades. And literally you have a blueprint to take the exact trades that I take now, because my trading is so simplistic that it's like, literally this is exactly what I do. So, you know, basically anything extra that I add, it's easy to add in, you know, different confirmations, but know that it's almost kind of like a basketball player. Again, I'm using basketball, simplest thing. If you're a basketball player, what do you learn first? You're going to learn how to run, you're going to learn how to shoot, you're going to learn how to pass, you're going to learn how to dribble, right? Those are the four things. You have like 4 or 5 things that you have to master before you start going through your legs and like going behind your back. So if you can get really, really good, it's like basketball players in the league that are like the most basic basketball players ever, but they're just killers. Like they just do all the fundamentals so well and they score like a lot. That's how traders who trade like this, that's what this is. So if you can master this, use your time to literally, I'm talking till you can wash, rinse, repeat this and make trades, you know, challenge yourself to take the best trades possible using a trade checklist like this. So this is my, like I said, my fundamental basic one, and I'm going to send you guys the actual details. I have like a detailed step-by-step one I'm going to send you guys too, but this one is so just basic that it's something that'll help you like not to get overwhelmed or overcomplicating things. You'll get in and you'll be able to enter super easy, because you'll know exactly what you're looking for an entry. You understand trends, which a lot of people don't truly understand. You understand consolidation. You understand major resistance and support. You understand regular support and resistance. You understand indecision candles versus decision candles. You understand continuations and pullbacks. So you understand a lot of big market things that are needed for you to be successful. You understand how to plot out where price should go. You understand where price, like I said, should be pulling back and where it should continue at. So these are the big things that you need to know, regardless of whatever else, other people are doing. I guarantee you, if you can take your time and really master this, you're going to make quite a bit of money. So after that, I want to go ahead and answer some questions real quick because I see some stuff. Okay, so the group chat is really simple, guys. I just need to be your friend on Facebook to add you into that. It's just a little message chat. So if you're not in it, just after the end of the webinar, shoot me a Facebook message and I'll put you in the chat. I had literally created it 30 minutes before the chat. Before the webinar, and I didn't have time to get everyone in there. So if I didn't put you in, my bad. But I'll get you in after so that you have everything and you can see all that I'm saying in there. But Cleophas says week shows up trend, an hour or 4 hours shows down. Which do you trust? Sorry if I missed it. Week shows uptrend, an hour or 4 hours shows downtrend. Well, if you're trading on the 4 hour chart or hour chart, then you're trusting that chart. So basically, the week chart is a very large chart. So you don't want to get caught up in the weekly chart because the weekly has nothing to do with where your current price action is at. Does that make sense? So like right now on the hour chart, this is it was a downtrend, but remember what I said it was going to do, y'all? I said it was going to reverse at the beginning of the webinar. So it reversed, and basically now it's moving into an uptrend. But even if it was showing which there's no way that this could be showing, this has been about a couple of days. So on the daily, it has to be showing a downtrend, which means that on the weekly, let's see what it was doing on the weekly. And I have so much up on this chart, so let me go to a different chart. A different thing. That's GBP USD. All right, so see how this is the same chart. So on the weekly, it technically was showing a downtrend, right? And that's what it was doing. So most of the time, that's what I was going to say. But now we can see what? One weekly candlestick, or this is the daily, my bad, y'all. 1, 2, 3, 4, 5 days it was dropping, which makes sense for the 4 hour to have been dropping and the hour to have been dropping. So it's going to usually be pretty congruent. You shouldn't get too confused, but notice on the weekly, what started to happen is it weakened up. It started to show an indecision candlestick. And if you notice, it didn't go make a lower low. Right now we're like that. So price is rising. So usually it's kind of congruent. You'll see it in some sort of way. With the weekly, it'll show up in one candlestick because that's all it can show up in. So that candlestick will be kind of weak because it'll take a week for it to complete. Does that make sense? You trust whatever chart you're on. If you're on that hour chart or the 4 hour chart, you got to pay attention to price action within those charts. Don't skip ahead. Like I said, it's all in reference to what you're on. No different than on an hour chart. Here's how a lot of people get tricked. They're trading in the hour chart and the hour chart's in a downtrend. But what do? They wait till price gets here, or let's say they got on and the price was down here. And on the minute chart, when price is here, guess what it starts to do? It's rising because on the minute chart, it's in an uptrend. So price is pulling back on that minute chart, but really it was still in a downtrend. Somebody gets in, and guess what? They keep trading up, trading up, trading up, trading up, trading up until price gets done pulling back, and boom, huge drop hits them. And they're like, yo, why did price drop? And they were on the minute chart. But what was happening on the hour chart was that pullback was just happening, and then price was getting ready to drop again. Does that make sense? So that's why I say the minute charts can be trick charts for a lot of people. I was someone who got tricked in the beginning, so I know minute charts are the devil. Sometimes what happens is, if you don't understand how price action works, you'll be on the wrong time frames, trading too long, and then you'll get faked out. But it's really not a fake out. It's what price needed to do anyways, because on the bigger picture, all it was doing was just pulling back. It wasn't in an uptrend. Does that make sense? Should make sense. Okay, so last but not least, really quickly, I'm just gonna do take profits and stop losses. And I'm not gonna go all deep into that because that's not what I'm about. Like with this webinar, it's not really what this is about. But I do want to. Oh, Demetrius asked me, do I have a video trading Heikinashi? I honestly don't scalp anymore like that. I'm a good scalper, I will tell you that, but it's just not my lifestyle. Like I don't really sit on the computer and trade very often anymore. I'm more of like the person who sets a trade. Like if you follow me on Snapchat, you'll see I set trades for like hours and then I go do a bunch of stuff and then I come back and look at the trade kind of. So it's not really my style anymore with Heikinashi. It's still an amazing way to scalp, I will tell you that. So if you guys have seen Heikinashi, definitely go look at that video. I taught how to scalp on a 1 minute chart, and it's a really good way to do it. You still got to use the higher time frames though. So just to make sure you know where you're at. So scalping is still awesome. It's just not my lifestyle anymore. Like I prefer to kind of set trades and walk away. Like it's just, yeah. So that's like why I don't really scalp anymore. If you're scalping, you're on the lower time frames. So you're scalping at those time frames. The only thing you're doing is just looking at, like for instance, I'm not gonna get into it because it's like a longer thing to kind of explain. But what I would mean is like, let's say you, for instance, you want to scalp this pullback, right? So obviously we know price is about to be in a technical uptrend on that 1 minute chart for a while. So I would say, okay, cool. Support is here. I would still want to use resistance to make sure that if price did happen to get too high, I know where I'm at. Does that make sense? Because you don't want to trade past the point that pullback would be over. So you still want to go take into consideration that hour chart, but if it's on the 1 minute chart, at least you know where you are now. Does that make sense? You just basically always want to keep in mind that you don't have forever to scalp because it's scalping. That's what it is. It's basically a minimalistic type thing. So you got to be very quick with it and you have to be knowledgeable of where price will stop moving. You know what I'm saying? And it doesn't make sense to scalp on a trending market. Why scalp a trending market and miss out on money and safety and longevity and the ease of not having to sweat and just the fact that you can just place a trade and walk away? So it doesn't make sense really. For those things, if you're somebody who just like likes the thrill of that and you're just like, ooh, I want to scalp. But I guarantee you, even if you're scalping, you're like, dang, you get pissed because the only time scalping is fun is when the market is really slow and you're just like dying to take a trade. That's when scalping is cool. Then it's like, all right, cool, let me get in and grab, 10 pips real quick and put a high lot size on there. Otherwise, I prefer steady and easy trades, longevity trades, kind of. Trades that I don't have to sit there and sweat about. I just know that they're going in my direction. Does that make sense? So that's why I say, if you want to learn to scalp, be a person who does diversify your trading so you can go both ways. So if I'm out of town or something, but even if I'm out of town, longevity trades win because I can wake up, do some analysis, and bam, I can set a trade and walk away for hours. I can go to the beach, I can do whatever, and then I can come back and I can be like, oh, snap, my trade hit my take profit, or oh, snap, my trade, hit my stop loss, or oh, snap, my trade is in the middle of hitting my take profit, whatever it may be. So that's kind of how I like to trade. But scalping is still cool. If you have a ton of time to just sit at your computer and you're just wanting to do that, definitely check out the Heikinashi video. And let's see. Support and resistance. I mean, not support and resistance, we're talking about stop losses and take profits real quick. Stop losses. So for instance, stop loss is a devil sometimes too. Because what it can do is if you're too careful with stop losses, guys, you will stop yourself out of every trade you take and you will not be profitable just because of that. That was also something I used to do because I was so scary when I first started trading. I didn't want to lose a dime. So I would be like, oh God, I just went $1 into the negative, and then I'm like trying to set my stop loss. But really, you should always give yourself enough space for the market to move. So for instance, if a resistance point was right here and you were getting ready to sell and you look back to the left, you want to go find basically the highest point of any of these candlesticks, like any of these small ones in here, any of these wicks. So me, probably, I'm honestly, sometimes I don't even use stop losses, just to be real with y'all. I don't take trades that I can't afford to lose. So, for instance, like what I mean by that is that's why you should learn how to control your lot sizes. And I have a video about that. You don't want to be somebody who gets on and you're like trading a 5 standard lot, 5.00, so it's $5 per pip, and then it goes 10 pips and you're $50 in negative and you only got $100 in your account. That's what a lot of people try to do because they want to make money quick. No, have it to where you could literally, if I have $100 in my account, I want to be able for the market to move 200 pips before it would even come close to touching my account. Does that make sense? So you basically want to have a nice lot size that doesn't put you in any harm. But over here would be somewhere to look at. You look back to the left always, even if you're selling or buying. So this is a selling situation. If I was selling right here on the hour, I would look up to the left and I'd say, okay, where are most of the wicks at? And I would kind of calculate my risk to reward. So I'd be like, all right, that's 128 micro pips, but where's my reward? So this is my risk right here. And if price needs to go make a lower low, let's say it doesn't even make a lower low, it just makes the same low right here. I just made 636 pips. So that's a very, 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 very good risk to reward ratio. But also, here's where, price should be coming somewhere in here-ish. So that was basically 1,200, 1,300 pips. So it's pretty, and honestly, 1% is hilarious. I'm not trying to like joke on anybody or anything. If you want to follow 1%, 1% is totally cool. But what you got to remember is that you're trading to make money. So if you understanding that only way you're gonna make money is if you are like trading a 1% account. Risking 1% of your account is if you're like a millionaire. So just to be real with y'all know how I trade. Everybody in here knows how I trade. That's why I was so big on learning how to learn the skill, then take risks. Because if not, you're gonna just be a broke trader basically that's over there whisking 1% of your account. It doesn't make sense at all. So when people talk about that, those are for people that are like trying to compound an account for years, I guess. I don't know. A lot of traders actually probably hate me like when I talk about risk management. Because I'm like not the average. I feel like you want to, like I said, you don't want to don't put money in your account and be foolish or stupid, but also you don't want to trade and risk 1% of your account, literally. Honestly, 5 to 10% of your account is even better, and that's still kind of small because it's kind of like, okay, cool, but it's 1%. Like I said, it's awful. You wouldn't be able to make any money really if you were only risking 1%, and that's just being totally real with y'all. So I know you hear that a lot with experts and stuff. They're like 1% of your account, but I guarantee you these are people that have like hedge funds and stuff, and they've got millions in their account. That's why they can risk 1% of their account. So that's kind of what I'll say, is that you want to kind of look at basically what you're willing to lose versus what you're so like I said, risk to reward is more important than even the percentage of that. You'll stress yourself out trying to be like, oh, is this 1% of my account if I lose this trade, or more than 1%? Like, don't even get into that game. For one, even the people who say that they're only risking 1% of their account, that means that like if price moves like 5 pips, unless they just put a stop loss every time, that means they're getting stopped out of pretty much every trade that they take, because they're trying to like save themselves from risking 1%. So just like I said, be thoughtful about those things. It's not as serious as you think. Once you become a really great trader anyways, and you're more consistent, you're not worried about that. You're worried about, is this a good setup? And that's pretty much the biggest thing. So setup over everything. Let's see. So would you say then, if you have, what would be a reasonable lot size to use on a good entry? It depends on your account size, guys. So like if you're a trade, what I usually use is this. This is kind of my rule. If you have a $100 account, let's say, I'm a riskier trader. That's why I have that. I sold that webinar in December, how to flip $100 accounts to 1,000 plus in a week. I flipped accounts in 2 days to 2,500 from $100, because like I'm not afraid to risk, and I kind of believe in my skill set. So that's why I can flip so fast. When you get really great at flipping, what you're going to notice is that obviously I'm risking way more than if I only started off with $100, most of the time my lot size is going to be like a 0.25. So I'm definitely risking way more. I'm risking 25% of my account there. It is what it is. Like, that's what I'm saying. If you have money like you're going to risk in the market, you're definitely like I said, $100. If you don't have $100 to risk when you start going live, like, you just shouldn't be trading yet, like live. Just stay on demo for a while, build up, start an account once you at least have that amount of money. So let me walk you through real quick before we wrap up and I answer the rest of these questiones. If you have I'm going to send you guys the 100 to 1,000 video. That was a part of my promise for the webinar, so don't worry, you will get that. But if you have an $100 account, and I cover this in the webinar as well, my view on that is that, you should have, well, let me say this. If you're trying not to risk anything, or if you don't want to be super risky, then maybe a 0.10, on that. But me, I trade about a 0.25 to start off. Once I get to about $300, I'm going to up it to about a 0.50. All right. So then once I get to about $1,000, okay, honestly, I'll just be real. Yeah, once you get about $1,000, I will take a standard lot on a trade. And like I said, then from there, it's kind of about a lot size up as you get through the thousands. So for instance, if you are at 2,000 in your account, I like to trade as 2 standard. If I'm at 3,000, I'm probably going to take a 3 standard. Does that make sense? So I basically go off of the thousands, or now start off in the hundreds. I'm using about a fourth of that. Does that make sense? Coolo. So remember in the beginning, the coolest thing about flipping the accounts when they're small is this. You feel so good about your skill set because you have to be, well, yeah, Emmanuel, you're right. It is only $1. You know, if you have 1% is only $1. Correct. That's why I don't follow that. Because guess what? I want to make more than $1, and I also want to be able to risk more than $1. Like I said, I'm not afraid to lose the whole $100. Neither should you guys be, because once you're really good at trading, you should have the mentality that, like I said, you're gonna make way more than $100 off of your trades. So even if I took a 0.25, think about it. Every 100 pips I gain, I made $25. So, if I gain 400 pips within that day, guess what? I just doubled my account to $100. So that's what I like to do, doing that. And I also teach how to stack trade. So if you really want to learn how I flip within that webinar, you're going to see that I basically risk the whole $100 in that first first 2 trades that I take. So most of the time, like, I went from doing 1,000 in a week, and I did it in a day off of, I think, was it 1 trade or 2 trades? I put it on Facebook. It's like in my old Facebook my old Facebook pictures. If y'all want to look, I don't know. I took the account from 100 to 1,000 that one day. Yeah, it was one day, and I think it was only 1 trade. So I risked a lot, like, on the trade, but I mean, who cares? It was $100. So that's kind of the thing. It's like, if you find a great setup and you know how to stack and you have good leverage, you can do it. FX Glory is what I use to flip accounts. You guys will find all of that in the video. So I'm excited for you to do that. But honestly, I'm not giving you guys the video until I see homework after the webinar. So I'm going to give you guys a whole bunch of follow-up content from what we learned today. I hope this was very beneficial. Was it very helpful to a lot of you guys? I want to hear some feedback. Hope it was. Hope you learned a lot. Good. All right. Awesome. So basically, yeah, I'm going to be giving you guys the webinar after I see some homework. So this is even different than how I've done different webinars in the beginning. I mean, not in the beginning, but just period. I don't really follow up as much, or I didn't really follow up. So we're going to be following up because I just want to see how you guys are doing. That's the biggest thing. Like, I want to make sure I have so much more free time because I don't take as many private clients at all as I was at one point. So I'm going to make sure that you guys are progressing. So in that little chat group, I'm going to definitely just basically hit you guys up in there with a load of follow-up stuff for you to study, and then I'll have some specific homework that I would love to see that you guys like post in there, and we can kind of keep each other accountable. You guys can keep each other accountable, and then, like I said, I can be in there as kind of a little bit of a critique, and make sure that things are just going smoothly. And one thing really quickly, you were asking how to put in a trade, Mo, on MT4. It's up here. It's called New Order. You just click it in whatever pair you're on, and then you choose the amount. So if you wanted to take a standard lot, you would go to 1.00. If you wanted to do 0.50, use 0.50, so it's 50 cents per pip. You can set a stop loss in there, and then you can do buy or sell. So that's how you do it in there. It's really simple. And I'll send a video on how to do that as well. But yeah, so everything, like I said, I'll also post that video for flipping once I see some good homework. So that'll be the encouragement. If a lot of you guys post some good follow-up stuff from what we learned tonight or today, then I'm going to go ahead and post the video when I think that you guys are ready in there. But I also have a couple different webinars besides that 100 to 1,000 webinar. So the homework is really just to basically find good entry points. I want to see the trades that you take over the next couple of weeks. I'll say the next 2 weeks. And that'll be the definite thing that I really, have you cover. And do I use stop and limit orders? I don't use them often, honestly. But, those are basically just where if you think a trade can happen at a certain point, you can basically put in a pending order. That's what they call it. So I don't, but you can, if you honestly YouTube that, there are people that it's such a simple concept. It's just a different way to place your trade. Instead of market execution, it's a pending order. And I don't use it often, so no, ma'am. But yeah, basically, like I said, execution. So I will be posting, today is what, Tuesday? I'll be posting tomorrow everything into the group that I want you guys to study up on, and then some practice stuff. Like I said, you guys to be practicing taking trades, and just using everything that you learned tonight. And you have it. Like I said, don't think that you need anything else right now. You have like everything that you need, and especially after you learn how to flip, you're gonna feel tons of confidence to do that. So basically take it serious, study it, re-go over the webinar again and again until it makes so much sense. Wash, rinse, repeat. Do it over and over. Once you get some good setups, post them in the group, encourage other people, and you guys are going to see yourselves be profitable. So going into fall, it'll be exciting to see the progress that you guys make. And I hope that this helps you definitely, start getting some bucks in those accounts. So I'm looking forward to it. And like I said, you guys will have me in the group. So any questions that you have, post into the group. I'll definitely be the support in there. Damien, I said I'll add you. So if you aren't in the group, go ahead and just send me a message on Facebook. Anyone who's not in the message group, just send me a message on Facebook and your girl will get you in there. And you're so welcome. I'm glad it was awesome. And that the replay won't be available until tomorrow. It's just the way that any meeting takes to upload it. So as soon as it is available, I'll post it into the group. I'm glad. Awesome. Well, I'm so happy that you guys, like I said, learned some good stuff. And no, you're so welcome. Thank you guys. And I'll be definitely, like I said, checking in and posting all that stuff. So just look out for it in there. Send me that message if you aren't in there. I mean, if you aren't in there. And thank you on the expecting message. I appreciate it. You guys are all welcome. Love you guys. And then, like I said, just look out for that stuff in the group and hit me up if you guys need anything individually. All right.